Recording in progress.
Good morning. Good morning, colleagues. Happy Tuesday. Thank you so much for making the time to attend this meeting of the Portfolio Committee. I see the Minister. Good morning, Minister, honorable members, the Deputy Minister, all colleagues on the platform. May I please ask the Secretary to just put up the notice of the meeting?
Good morning, Chairperson.
Thank you. Thank you so much. I was quite surprised by that notice as well, reading through those items. Thank you. Thank you so much. Colleagues, maybe let me start off by offering apologies, just in terms of, firstly, the program change, which, as you know, would have been necessitated by the change that had to be made to the parliamentary program based on the fact that the fiscal framework has had to be set aside, withdrawn, and therefore the process around the budget restarted, which therefore means that the work that we had already begun around the strategic plans, around the adoption of budgets, that has been moved out, obviously awaiting direction whether we will be required to redo it or not. I did have a conversation with the House Chairperson of Committees just to get clarity on procedure, where he indicated that in many instances there is no expectation of any major changes that should happen happen to whatever we have already been exposed to. Only in instances where, either there's severe or drastic reductions of budgets, or there's had to be a necessity that the programs are revised. Otherwise, we will then take it that we are proceeding on that basis. Now, as a committee, we obviously had to go back and look at the program that we had adopted, see what we could bring forward to this meeting, while then work is underway to then rejig our program in line with the parliamentary program that is presented. We're expecting that in next week's meeting, we will then be able to present to you the amended program for adoption, which should be finalized and circulated to you during the course of this week. I do also want to report that as per the last meeting, we would have sent off the correspondence to the Minister relating to the presentations that we had received on the strategic plan, the annual performance plan, as well as the budgets of the department and the entities. And I want to thank you also, colleagues, for your input into that particular correspondence. So today's meeting then, as you will see in front of you, there is the agenda. the adoption of the minutes of the 22nd and the 23rd of April. This is when we were going through those strategic plans, annual plans. Then honorable members will remember that when we were considering the annual reports of the entities, a number of entities' annual reports were either not ready, they were delayed, and so forth. They have since now been finalized, and that is SITA, Broadband Infraco, the post office, and the Postbank. So we will get those annual reports. And then the DCDT had last year indicated that they were in the process of finalizing their new structure, and we just thought that it would be appropriate then to get a report on that structure. Honorable members, may I firstly check apologies and then request somebody moves for the adoption of the agenda. Do we have any apologies, Hajira?
Good morning, Chairperson. We have an apology for Mr. Makobela, and then we have an apology for Mr. Stones. He will attend, but he will come late. And then the DG will also log in late. Thank you, Chair.
Thank you very much. And let me welcome back the Deputy Minister. We were informed that you were not well in our last meeting, DM. So I hope you are feeling better and wish you an even speedier recovery. Colleagues, can I have a mover for the adoption of the agenda? Thank you. I've got Honorable Subrathi moving. Honorable Sithole?
Yes, seconded, Honorable Chair.
Thank you very much. Let us go then straight into the adoption of the minutes. Hajira, could you put up the minutes of the 22nd, please?
I'll do that, Chair. Minutes of the 22nd, Chairperson.
Thank you. You may proceed to the next page. Sorry, please go up. Thank you very much. You may proceed. Please go up, Hajira. Thank you. You may proceed. Honorable members, I'm assuming that if you have changes, you will pick them up and raise them as we go through the minutes. Thank you. Thank you. I think on matters arising there, Hajira, we should add the item relating to the fact that members did raise challenges with the use of Wednesdays and some Fridays in the committee agenda, because that must not get lost. We need to ensure that when we bring back the second iteration of the committee program, that item is included. Honorable members, with that addition, if there's no other addition, may I have a mover for the adoption of the minutes? Thank you, Honorable Subrathi. Do we have a seconder?
I seconded, Chair.
Thank you, Honorable Sithole. Hajira, can we put up the minutes of the 23rd of April, please?
Minutes of 23rd April, Chair.
Thank you. Can we correct the spelling of Honorable Melishe? Her surname is spelled incorrectly.
Thank you, Chair.
On page 2, I do not believe that the minister was present in this meeting. Ajira, can you also just correct this on the minutes? Whenever you mention committee staff, Ms. Lawrence never appears on the minutes and she's always in the meeting. I would like that added, please.
We'll do that, Chairperson.
Thank you. So in this, on page 3, then we noted apologies for the minister, the deputy minister. Thank you. Oh, sorry, I see you said, okay, there it is there. Thank you. You may proceed. I believe that those matters arising are incomplete, especially referencing what we had said, that a number of questions were either unanswered in the meeting or insufficiently or inadequately answered, insufficiently, whatever word is appropriate. But there is a matter arising, which was then that we would write to the department outlining the areas of concern that we requested we would get back before the adoption of any report on the DCDT and its entities. With that addition, may I, if there's no others, request somebody moves for the adoption of the agenda. Thank you, Honorable Subrathi. Honorable Sitole. Thank you, Honorable Sitole, for seconding that motion. I believe that the next item on the agenda then is to go straight into the presentations. Am I correct, Ajira?
That's correct, Chairperson.
All right. Thank you. Thank you, honorable members. Minister, once again, let me welcome you to this meeting. It feels like it's been forever, you know, we shouldn't have so many holidays in this country, starting from scratch now. But I did in my introduction, obviously, seek to speak to the fact that we did not have an opportunity to consider these particular reports. Let me also apologize to yourself and the department, because I am aware that you were not supposed to be with us today. We had initially scheduled the GCIS and the MDDA to present their strat plan, their corporate plan, annual performance plan, and their budgets. So we truly appreciate you accommodating us, and we hope that once we then have finalized our second iteration of the program, we should not have these challenges anymore. Without wasting any time then, Minister, may I please hand over to you to perhaps lead in the introduction of the items. Thank you.
Good morning, Chairperson, to the DM, the representatives from all the entities, and most importantly to the members of the Portfolio Committee. Thanks, Chairperson, for those remarks. We thought it was important, despite the changes to the program, that we are part of this engagement, given that this was an outstanding item that we needed to be part of. And given that also we've got 3 sets of presentations, I think the majority of the contributions would come from the entities who are represented by their CEOs. From the department side, the delegation would be led by DDG Ma Sholoho. And as noted in the apologies, the DG will then join during the course of the meeting. You will note when you go into the presentations, Chair and honorable members, that they represent a very mixed performance across all the entities. On the side of SITA, it shows there's been some modest improvements. in target achievement, and it remains financially sustainable. But of course, it continues to face delivery and capacity challenges that ought to be addressed, particularly with meeting government's aspirations for driving digital transformation. BBI, on the one hand, shows also some modest performance on its score. I think the most pertinent question with BBI is always going to be about its financial sustainability, and that is something that we assist with, particularly also considering the debate which will ultimately lead towards the state digital infrastructure company. SAPO, on the one hand, as we know, continues to be under business rescue, and the concerns there continue to highlight underperformance with persistent operational and audit concerns, which members of the committee have also previously raised in their engagements. With regards to Postbank, there is some commendable operational gains that are starting to emerge. It still continues to be undercapitalized and, grappling with government's weaknesses that existed. We now have a board that has been constituted, and that will help deal with the internal oversight and ensuring that from a good governance perspective, from audit outcomes and resolving some of the audit issues that the AG raised, that those are addressed. From the department side, Chair, I think we've previously shared with you the two significant developments around the internal audit committee team to ensure that the process for getting the entities towards what would be generally acceptable audit outcomes across the entity, and one which we can hold with pride, continues. We've also, as we shared with the committee in some of the previous engagements that we've had, initiated a governance delivery and accountability workshop, which was intended at looking at the common trends across portfolios and how internally we can exchange best practice that will help some of the entities whose audit performance still show serious concerns and get them out of those. The department will then be able to present with to present to the committee the process undertaken towards getting to the new structure for the department. Work on that began in the last administration, and the delays towards that finalization was largely due to the transition period between the two administrations, and most importantly, the process that is required in terms of compliance, getting the Department of Public Service and Administration to do their approvals, which have now been done. But DDG Mashologu, when he gets to that aspect, will be able to get into details on that. That is basically the introduction on our part. Before I hand over to DDG Mashologu and the entities, I would also invite the Deputy Minister to make his input, particularly on the entities, in supplementing what we have submitted in the introduction, so that then we can dedicate the majority of the time to the entities. Back to you, Chair. Thank you.
Thank you. Thank you very much, Minister. I think also just for framing for us what to expect from the presentations. Deputy Minister Gungubele.
Thank you, Honorable Chairperson. I think the Minister has actually dealt with the key elements of overall opening. Thank you.
Thank you very much. Thank you very much, DM. DDG, do you have anything to add before we hand over to the entities?
Thank you, Chair. Morning, honorable members. I don't have anything. I think the Minister has covered everything. I think we can go straight to the entities. Thank you, Chair.
Thank you very much. So I think in the order that they appear on the agenda, I believe that the first presentation then should be from SITA I have not seen the chairperson of SITA, but I'm sure she is in the meeting. Let me just, I think specifically just welcome the chairs of the boards of our entities, the CEOs, all senior managers, executive managers that are present. Chairperson Mudzao, are you in the meeting? Could you lead us?
I am here, Chair.
Thank you.
Thank you so much, Chair, and a good morning to you, the honorable members, the Minister, the Deputy Minister, and all the colleagues that are on the platform. We are going to present to you our outcome for the 23-24 financials, as you've already indicated. There's just 4 areas that I'm going to highlight. The first one, the Minister has already alluded to, which is the annual performance. There has been a good improvement on the achievement of the targets from around 44% in 22-23 to around 62% in 23-24. Another area of improvement on the performance information is the fact that in the preceding year, one program was qualified, and however, in this particular year, both areas programs have been unqualified. Another area which I believe is also an improvement I would want to highlight is with regards to the reported irregular expenditure, which has declined in the reported year by around 75%. To 112 million. It's also a good one because that came off from around 465. I think the one area that, actually 2 areas which were regression was with the financial statements, which regressed from a qualified opinion to a disclaimer. And as such, the financial statements that we'll be presenting here, or the numbers rather, are considered unreliable by the AG, particularly because of the weak internal control environment that we are working hard on to improve. The other element that was also a regression is with reportable compliance with legislation. Out of the 7 areas of that AG reports on, around 6 had material findings. There was actually no findings when it comes to liability management, which was a good thing. But these are all areas that, as a board, we're working on. Another aspect that I'd want to highlight, Chair, is 2 areas of material irregularity. SITA currently has 2 material irregularities which were reported in 2021. There's been various progression on both of them. On one of the items, which was for 23 million, AGSA has referred that to the SIU. The board has assessed and responded to the AGSA on the other material irregularity of around 1.5 million. The MD, AMD, when he presents, he will give more information on that. And just in conclusion, when the audit was finalized, there was around 192 audit findings. And again, the AMD will highlight the status on that. I just believe it's important that I give assurance to the committee that despite the delay in tabling, the board and management have worked hard in terms of addressing particularly the audit findings that are there. It will be highlighted later. And the intention for that is to ensure that when we do appear to account for the current financial year, which has closed 24-25, there would be an improvement in that particular regard. With that, Chair, I would want to welcome the AMD to present the SITA results for 23-24. AMD, over to you.
Thank you, Board Chair, and good morning to the Chairperson, the Minister, and other members on the platform. We can go to slide 2. I'm going to focus on Part B, which is the performance information, Part C, governance, and Part 7 or F.7 on finances. We can go to the next slide. So on the performance information, the strategic programs covers thought leadership and service delivery, digital infrastructure, skills and capacity development, financial sustainability, and procurement and industry transformation. We can go to the next slide. On the performance in these various areas, on thought, leadership, and service delivery, we achieved 3 out of the 6 objectives, putting us at 50%. Then on digital infrastructure, we achieved 5 out of 5 of objectives, which is 100% performance. Skills and capacity development, we achieved 1 out of 2 objectives, putting us at 50%. Financial sustainability, we achieved 1 out of 4 objectives, putting us 25%. And procurement and industry transformation, we were at 75% with 3 out of 4 objectives met. So in total, there were, if you could just stay on that slide. In total, there were 21 targets and 13 were achieved, putting us at 61.9%. Some of the areas that we were not able to then achieve related to court online rollout, indigent household application and integration, phase 1 are rolled out, employee engagement levels, transversal contracts and panels and frameworks, the refresh of these, the service automation within SITA, the EBITDA target, percentage revenue growth for services, and then we achieved a disclaimer in our audit outcome, which is concerning. There were 192 findings. Our focus on addressing these matters linked to the Auditor General recommendations that we are focusing on. We are rectifying weaknesses in terms of financial performance management. We are trying to look at smart objectives because some of our objectives are outside our control, and it does become a challenge to then bring them to the fore. We are focusing at all levels in terms of driving improvements at ExCo, ManCo levels. I think what is also very, very key is that we are looking at interventions to address our procurement automation, and procurement automation is the Achilles heel of SITA, and we're pushing to try and conclude that in Q2 of this financial year. And then customer and stakeholder management, efficiencies to be able to manage that effectively. We can then move to the next slide. As indicated, we then achieved a disclaimer. There were 192 findings, and that can be broken up into 65 matters affecting the audit report, 115 other important matters, and 12 on administrative matters. We had a workshop with the AG on the 25th and 26th of November to make sure that there's alignment on understanding the weaknesses and understanding how we then address them. We can move to the next slide. So on this perspective, we then, as the various lines of business in SITA, looking at the root causes, defining management action plans, and each of these action plans are signed off by the accountable executives. We also then workshopped with AGD root causes that we've identified, as well as the audit action plan to clarify any areas of dispute. We've then introduced monitoring and reporting with weekly ExCo audit war rooms, and these report into bi-weekly board audit working sessions so that we track and trace what's going on. The management letter points or findings is signed off at executive level. It's also verified by our internal audit. Then there are internal controls of capacitation, appointment of executives, especially in internal audit and governance, risk and compliance. We're reviewing business processes and enhancement of systems. If you look at the performance at 31st March of the 192, we were 34% concluded with findings. And then on the 30th of April, we are sitting at 53%. We are confident that all the majority of the findings will be closed by end of May. And the focus is on the MARS areas, the matters affecting the audit, to try and ensure that those are concluded as we then work with AG to conclude. Some of the highlights for the period was 99.35% core network availability. We've achieved 58% SMME spend on the target of 40%. We've deployed 2 e-services on the indigent household application. We've automated 4 services in SITA. We did maturity assessments to 107 government departments, awareness campaigns across 171 departments. We've launched the customer complaints and query management dashboards that have been rolled out, where people can track and trace and have visibility of requests in SITA. We've improved our maturity to 3.93 in terms of security. 83.11% employees were trained. We've also presented internship programs to 219 unemployed graduates. 270 bursaries were also awarded to employees. And then we established 4 cyber labs in schools across KZN, Northwest, Eastern Cape, and Northern Cape. You can move to the next slide. To give a 5-year view, in 2019-2020, we had 60% of our APP performance. And then we moved over to this year on a 61%, with the previous year, 22-23, being at 44%. So there has been a move to improve, and that is evident over the last 2 years. We can move to the next slide. On the governance side, the Audit and Risk Compliance Committee, the matters raised linked to current plans needing to have a focus on business continuity and delivery of business operations. They also raised then the issue of the audit and the remedial action plans, the instituting of monitoring and close checking of movement on the plans, the fast tracking of filling the vacancies of internal audit and governance, risk and compliance executives, which has been done. And then obviously working with the Auditor General to make sure that we address the audit findings that have come up. Move to the next slide. To close up then on the finances, as indicated, the SITA continues to be a sustainable organization. Revenue growth of 9.2% from the previous financial year, sitting at 7.2 billion. And then net surplus before tax, sitting at 594 million, 6.41% improvement. Total assets sitting at 5.9 billion, 14.45%, and net assets sitting at 4.4 million. That's a 10.71%. We fell short of our cash generation, but continue then to be a sustainable organization. At this point, I would just like to call in the CFO, if you want to add on the financial information. CFO.
Good morning, Chair, members, Minister, DM, and colleagues. Nothing to add. I think the finances in the main are covered, Chair. Thank you.
Thank you, Chair. Back to you.
Thank you very much, Acting MD, CFO, and Chairperson of the SITA Board. May I suggest that we take all of the presentations, and then we will come back for discussions after. So the next presentation, I believe, should be Broadband Infraco. Is the Chairperson in the meeting?
Is Chairperson, I'm in the meeting.
Thank you, ma'am. Yes, you are. You may proceed. Thank you, Chair.
Okay. Good morning, Chairperson, honorable members, the Minister, DM, and other colleagues from the rest of the entities. In terms of the BBI annual report, I'm going to cover the overview and then hand over to the CEO to take us through the rest of the presentation. So from an organizational journey as well as the milestones that BBI attained in the year under review, it's very important for the committee to note that BBI has been operating independently without any funding from any of the shareholders, which are DCDT and IDC since financial year 2011. As a result, BBI has been sustaining its operations through internal revenue generated. But despite all these challenges, BBI managed to expand its network reach up to 15,000 kilometers of fiber. It also managed to build about 150 POPs and connected SA Connect sites and managed to maintain about 713 SA Connect sites. However, in the current cycle, BBI achieved a qualified audit opinion, which was due to the asset valuation and classification issues. The CFO will talk more about this qualified audit opinion in the presentation. As the company, we identified a number of corrective measures in order to improve our audit outcome. One of the corrective measures that we've identified is to engage an external valuations of asset standards is attained. We also managed to improve our internal controls through enhanced governance, as well as documentation and regular audits. We are confident, Chairperson, that through all these corrective measures, we'll be able to return to our normal unqualified audit opinion in the next cycle. From a performance overview, we're happy to report that through our strategic projects, we've exceeded our targets, especially in relation to connectivity of the Wi-Fi hotspots, of which we attained 4,155 connected Wi-Fi hotspots against a target of 3,000. We're also happy to report that in terms of connected households, we achieved 15,000 households that were connected against a target of 10,000 under one of our strategic projects, which is the Broadband Access Fund. And it's very important for the committee to know that this connectivity is being attained through SMME's empowerment, which is embedded in our implementation strategy on all the strategic projects. It's very important to also note that through implementation of these projects, we've also contracted about 52 internet service providers across all the 9 provinces in the country. Another achievement is from an economic transformation performance, whereby through implementation of all these strategic projects, we managed to spend 49% of procurement on designated groups against our set target of 15%. This is a huge achievement, Chairperson. We also managed to engage about 35 small medium enterprises against the target of 3. This is also a huge milestone and achievement for BBI. Despite all these great achievements, we also encountered underachievement or areas of concern, especially from our financial sustainability, whereby the target was not met. However, moving forward or looking into the future, we'll focus on improving our financial sustainability through various interventions. The first one, as I indicated previously during the presentation of the annual performance plan, is that we are on a process of accessing the Eskom and Transnet infrastructure, and we're also aware of the intervention by the portfolio committee and will also participate in that process to ensure that the Eskom and Transnet infrastructure is being accessed by BBI in order for us to be able to be financially sustainable. We also embarked on a process, as I indicated previously.
Maybe it's showing his phone. I don't know.
Sorry.
That his name is on there.
Sorry, Chair.
CEO Mbengashe, can you please mute? Apologies for
I was
that.
saying, as previously indicated, it's fine. As previously indicated in our strategic plan as well as APP, we also embarked on a process of acquiring an ECS license because our competitors have dual licenses. This will also assist BBI to be able to be financially sustainable. And lastly, as indicated, once again, we're in the process of accessing the spectrum, and that's a work in progress. And we've been engaging ICASA in order to acquire this resource. We also developed a sustainable revenue plan, of which we submitted to DCDT in order to secure long-term sustainability. Our revenue plan consists of a number of interventions. The first one is commercialization of existing infrastructure. I also touched based on this during the presentation on the APP, as well as the strategic plan, whereby BBI has planned to monetize underutilized POPs and fiber roads. We also have intervention to consider or leverage on network as a service, as well as internet as a service as part of our service offerings, and expanding on the service offerings for both public and private sector clients. Secondly, we have also planned to embark on a consumer market penetration by entering the consumer space via our wholesale channels. I also spoke lengthily about this during the presentation on our strategic plan as well as the APP. So all these are corrective measures. They're also part of our sustainable revenue plan, and there are a number of projects that will enable achievement of all these interventions or initiatives. Lastly, I also spoke about Triple P or strategic partnerships, whereby BBI has started engaging in infrastructure sharing agreements with other operators and state-owned entities in order to reduce our costs and increase our reach. I spoke lengthily about this during the presentation on our strategic plan as well as APP. Through your permission, Chair, let me hand over to the CEO to take us through the details. Thank you. Mr. Zor?
Can you hear me now? Hello?
We can hear you, CEO, although you've got an echo.
All right, let me try to put the echo. Echo is coming through. Let me just put it. Can you hear me?
Yes, you may proceed, CEO. Now we can hear you.
All right. I'll proceed from where the chairperson of the board left. Good morning, Honorable Chair and members. Good morning, Minister, DM and colleagues. So we have the table of contents there. I will not overemphasize on what has already been described. The journey of BBI began in 2007, and there are various things that we managed to achieve during that journey all the way to 2024. I will not go into those details. I'll just focus more on the performance overview. From a performance overview, we start looking at the 5-year performance from 2020 all the way to 2023 and 2024 financial year. So in 2020, we achieved 68% of our shareholder compact. You can see some of the key areas that we were focusing on. Then in 2021, we had 74% achievement. 2022, 74 as well. In 2023, 70%. The highest achievement for the organization was over the past financial year, where we achieved 90% of the shareholder compact. And the details, as you can see, are laid out there in terms of the various KPIs. Let me proceed to the details of those, the details of the achievement. So we're looking at financial sustainability targets that were met. We had 6 of those. I won't go into detail, but all the 6 pertaining to the finances were achieved. There is one that I will look at later on, which was not achieved. And then from a human resource perspective, training and getting interns and so on, we achieved both those. And we also have to measure the performance of the network for the purpose of our clients and everybody else, including the hotspots, the underserviced areas, and so on. So 6 of those network targets were met, including the projects, the actual projects that the chairperson was talking about. And then we have got 4 economic transformation targets that we're looking at, which includes the empowerment of the SMMEs, maintaining a BBBE level, and also adopting and providing services to chosen underserviced schools. The areas of underachievement include the one financial sustainability that I spoke about, which was not met, where the debtors days target of 60 days was not met. It came in at 69 days. We, as remedial action, we have appointed a debt collection agency for long overdue debtors, and we're also negotiating with some of our suppliers so that we offset where we owe each other. Then the one governance target that was not met is the qualified opinion audit, which was related to the value of the assets. We are seized with correcting that because we've never had any unqualified audit, a qualified opinion. And we want to go back, like the chairperson, to unqualified audit opinions. Then on the key projects, I will not dwell too much on this, just to say that we have met all targets and in some cases exceeded. So for the Broadband Access Fund, we met the targets, and by now, as we are reporting, we have completed this project. We are now busy packaging it for presentation. We were supposed to connect 50,000 households. We connected up to 53,000 households within budget and within the duration that we're supposed to do that. We're supposed to connect 3,000 public Wi-Fi hotspots under the Broadband Access Fund project. We connected about 3,100, which was also an overachievement. The maps will show where we have provided these connections and so on. And we have got GIS maps, we have got the coordinates and everything of where these connections have taken place. Then on SA Connect Phase 2, again, we have also met our targets with the distribution of connection as shown. I will not go into the detail. Safe to say that even though we had a very short space of time to roll out the first part of the project, it's a 3-year project. We met the first part of the project, the second part, and we are now embarking on the final part where we're going to connect 6,000 public Wi-Fi hotspots in this current financial year where we are, meaning that we are not behind on any target of connectivity. We have met all our targets, and we are going to meet the final target by the end of the financial year. Then let me move to the USASA projects. We execute some of the projects on behalf of USASA. And again, the one that we're looking at the moment is where we need to do connections in the Northwest. And we have connected 244 sites out of 332. For Pixley Kaseme and OR Tambo, those projects were completed, and at the moment we are just managing them. We're making sure that they are running online. And so again, from a project perspective, we are punching above our weight, even though we're not capitalized like we said earlier on. The impact for SA Connect and the Broadband Access Fund projects that we have spoken about is huge. I think the honorable members do understand that. There is coverage and connectivity in underserviced areas, households and public facilities, where there is low income areas were connected. Families who previously would have to walk great distances, unable to connect to get services from government, they now are capable of doing that. And ISPs also have managed to learn from each other, and we're growing the economy from the SMMEs perspective, and they are able to provide the services as required. So when we have completed the SA Connect Phase 2 by next year in March, and we have completed the Broadband Access Fund project and the USASA projects, we still have a huge gap, probably of 70% of the unconnected people. These current projects that we are working on will cover about 30% of the gap at this stage. As part of the implementation, we have empowered the SMMEs, 52 ISPs in the Broadband Access Fund project, and 76 ISPs in SA Connect. We have trained some of these SMMEs, and they are now eligible to get more projects and become more sustainable in their own rights. Some of them are now working to extend projects for Vodacom, for Telkom, and so on. So it's an industry which has been stimulated by virtue of these projects that we are working on, and that we have empowered these ISPs on. Lastly, there is long-term social economic impacts, direct jobs which are created, indirect jobs, and in some cases, manufacturing of small components that's beginning to take place in various areas and so on. So I think from a socioeconomic impact, it is huge. It has not yet reached the 100% that is envisaged to be, but it's a good starting point, and BBI is proud to be implementing such crucial projects on behalf of DCDT. On the future outlook, we are focusing on completing the SA Connect projects and any other key projects, including the financial self-sustainability through the commercialization of the projects that we have worked on right now, as well as network stabilization, especially when we finally manage to aggregate the huge infrastructure that lies in the non-ICT SOCs, the ESCOM, the Transnet, PRASA, and so on, for the benefit of the rest of the unconnected people and the underserviced areas. And then we're focusing on the turnaround. Again, the chairperson emphasized on the requirements for that, the ECS license, the spectrum, the aggregation of infrastructure, as well as the new products and services that we are focusing on. We're also going to be focusing on our human resources to make sure that they are motivated to do the job that they've been doing so well. I think, Chair, let me end to the CFO to take you through the annual financial statements. Thank you.
Thank you, CE. Good morning to the Honorable Chair, the members, the Minister and the DM, and the rest of the colleagues. I will be taking you through our financial statements in terms of how we have performed in the previous financial year. Chair, you will see that from a revenue perspective, there has been a year-on-year revenue growth sitting up to 520 million for the current or for the previous financial year. And this is really mainly on the projects that are currently being executed, which do include the likes of the USASA projects, the BAF, as well as some of our growth in some of our anchor customers and the works projects. Chair, I think from a GP perspective, we are sitting at 184 million, which is equivalent to around 35% GP margin. You will see, Chair, that in the current financial year, we still do have a loss where we are sitting at 201 million. And I think the biggest contributor, Chair, is obviously some of the impact, at least on the adjustments that have had to be made, specifically on the assets, where you would have seen a huge depreciation growth in the current financial year on OPEX, but also I think some of the increases are just in line with the projects that are currently being executed. CE, if you can go to the next slide. Okay. Chair, this is just an overview in terms of our income statement, where you will see that from a revenue perspective, our revenue, where you will see that, Chair, despite the slight reduction in our customer numbers, you would have seen that we do see a growth in our revenue, and the growth is really the direct contributors of that revenue growth is coming through from our anchor customers, the MNOs, the National Revenue Works, as well as the SA Connect related projects. Chair, you will see that from a margin analysis, there was a bit of a drop in terms of our margin, and I think that is directly related to one of the biggest contributors in our revenue, which was the USASA project. But we are seeing an improvement on this in the current financial year, and as a result of the slight decline in our GPs, you would have seen that our EBITDA is also sitting at a lower amount than what it was in the previous year. And then, Chair, in terms of OPEX, when we analyze our OPEX, excluding depreciation and employee costs, you will see that there was a sharp decline in terms of our OPEX, where we moved from 21% to only 9% in the current year. And then from our cost of sales, the makeup of our cost of sales is mainly coming through from the leases and co-location, as well as maintenance and access providers, and the makeup of the cost of sales is also directly in line with the projects that we are currently executing. See if you go to the next slide, please. The next slide, CE, please.
It's on the next slide.
Now it's on the balance sheet. Yes. Thank you, CE. Chair, then this is just an overview of our balance sheet. Sorry, CE, please go back. Yes. This is just an overview of our balance sheet, where the biggest contributor on our balance sheet is made up of our assets, which are currently sitting at 697 million. I think we will start seeing an increase or a growth in our assets with the projects that we are currently executing. And then our cash balance was sitting at 496 million in the previous financial year, and our trade and other receivables were sitting at 76.8. And then if we look at our equity and liabilities, you do still see that, Chair, that our liabilities is also sitting at at an increased amount or at a higher amount, and this is also directly linked to the deferred revenue in terms of the as related to the projects that we are executing. But in terms of the overdue debt that we do have, both from Eskom and Transnet, we are working on settling that, and it will reduce over time. And then, Chair, I will just quickly go to the next slide, which is the fruitless and wasteful expenditure, CE. Thank you, Chair. Then I think from the fruitless and wasteful expenditure, we did have fruitless expenditure of around 625,000, which was interest earned or interest incurred on debt that was paid late. And then in terms of our irregular expenditure, we did have an irregular expenditure that was raised by the auditors last year of 16.5 million. And this irregular expenditure basically came about as a result of on one of the tenders that we had, the administrative phase was not, although it was conducted and it was included in the BAC reports and all the other reports, it was not documented in the BEC report, and as a result, that resulted in the irregular expenditure. But I think with this irregular expenditure, we've gone through all the processes, the relevant processes internally, to ensure that we go through a process of condonation and also apply the necessary consequence management relating to this. See if you go to the next slide, please. I think on this slide, Chair, I will just mention that the current balance, or we closed off the period with the current balance of 125 million sitting in our irregular expenditure. But as I've indicated, I think in the current financial year, we've made a lot of strides in terms of taking through this old irregular expenditure through the loss control committee and the relevant processes, so that we are able to get this condoned and the irregular expenditure reduces. See if you can go to the next slide. Thank you. Chair, then the last slide just pertains to our audit findings. So for the previous financial year, we did get a total of 29 findings. And as we stand as at the end of April, Chair, we have closed out 23 of the 29, and we are left with the 6, which we will be closing out before the end of the financial year. Chair, you will see that the reason behind our qualification came through from some of the findings that the auditors raised on our PPE, where they raised concerns around the completeness and existence of our assets. And as part of us trying to clean up this finding, Chair, we did go through another complete asset verification count, so that we ensure that all of the assets that are on the ground are actually recorded in the fixed asset register, and those that are not on the ground are disposed accordingly. And I think, Chair, we have also just put in processes in place to ensure that we do not have another repeat finding pertaining to this issue specifically on the assets over time. But there are processes that we have implemented to ensure that we don't have another repeat finding. And I think just in terms of the assets, there were 2 particular matters that affected the audit report, which I think we have said with the auditors, and gone through the identified the root causes as well as taking them through our approach. And as we said now, Chair, we are in alignment with the implementing. Chair, thank you so.
Thank you. Thank you very much, CFO, CEO, and Chairperson of Broadband Infraco for that presentation. We'll take the last two presentations. Let's start with the South African Post Office. I'm not sure who is leading the presentation on behalf of SAPO. Who is leading this presentation? I see that it's on the screen, but I'm not seeing anybody speaking.
Good morning, Chair. Good morning, honorable members, the Minister, Deputy Minister, and Director General. I will hand over to the business rescue practitioners, Anush, who will start the presentation. And from there, I will continue. And then Lenny Govender, who's the acting CFO, will proceed with the details. Over to you, Anush.
Good morning, Chairperson, honorable members, the Minister, DM, and everyone on the call. Yes, thank you for that. Just in terms of our presentation for this morning, it will cover, I'll talk to the next two slides, and Juanito Damans, who is the joint business rescue practitioner, will also chip in where he needs to. So effectively, in terms of I think what's important to note in terms of the period under review or the period that was audited, that relates to the 12 months ended 31 March 2024. For the first 4 months of that period, the entity was in provisional liquidation. Juanito Damans and I were appointed on 10 July. And with that, there's the administrative aspects of the business rescue that needs to be dealt with, particularly our appointment, publication of a plan, and of course, adoption of the plan. So we effectively had a further few months, which was more administrative in nature, and we were then formally appointed as business rescue practitioners, and the plan was effectively adopted on 7th of December 2023. That then left us with the period of Jan, Feb, and March of 2024, which was largely focused on preservation of assets and, of course, leading the 189 process, which is quite a detailed process of consultation. I think it's important for the committee to understand the period in question, and of course, it was not business as usual for the SA Post Office. The BRPs, I'm not going to run through all of these points in the slide, but the BRPs, effectively as part of getting the plan published and adopted, identified several key drivers, to achieve what we believed would be a successful and sustainable turnaround. The BRPs also then applied to have the provisional liquidation order set aside. The matter was heard on 22nd November 2024, and as a result, that provisional liquidation was then also was officially set aside. Just important comments to note further: the board of directors was dissolved in May 2023. Of course, that was during the time of liquidation and prior to the BRPs arriving on the scene. The BRPs have assumed the responsibilities of the board of directors and are effectively the accounting authority. Next slide, please. The various aspects that we focused on as part of the business rescue, there were a couple of key points that we would like to highlight. The BRPs, one of them being the BRPs receiving approval from the minister to liquidate the dormant subsidiary, the Courier Freight Group, which approval we have subsequently received, and of course, the liquidation of that dormant entity will continue. Or will be executed upon. The BRPs then requested approval for exemption to dispose of certain properties. We are still awaiting that approval. At that time, and this was obviously done early at the onset of the business rescue, because that was part of the process of rationalizing assets, streamlining the business, rationalizing the business, to then focus on what was core to the entity. In April and May, as alluded to, the Post Office retrenched 4,342 employees as part of its ongoing business rescue process. The branch network was rationalized, which resulted in 657 branches, which we now have in the branch network. And of course, the business rescue was premised on the funding that was to be received in terms of the application that was made to place the entity into business rescue. I think that's an overview. And as mentioned, these are broken periods in the sense that the entity was in liquidation, the process for applying for business rescue, and of course, in the 3 months that it was officially in rescue once the plan was adopted. The key performance indicators, the strategic objective was obviously set, was not set by the BRPs, but by management at that point in time. I'll just want to check with my colleague, Juanito Diamonds, if he has anything to add before we hand back to the acting CE and our acting CFO to continue with the presentation.
Good morning, Honourable Chair, honourable members, the Minister, the Deputy Minister, and the DDG. Thanks, Anush. For this reporting period, I've got nothing to add over and above what you've dealt with now. Thank you.
Thank you, Chair.
Thank you. So we must be, as before
Sorry,
I proceed.
Acting CEO, can I ask that you put on your video, please? We were so happy to see Mr. Damas and Mr. Ruplal. We've missed them so much in this committee. Thank you. Thank you very much, ma'am.
Thank you, Chair. Chair, I'm working off my kitchen because we have no power in Pretoria, so the connectivity is not the greatest at the office. So you can see my kitchen in the background, and I apologize for that. Chair, under the year under review in which the audit has taken place, the BRPs alluded to the various timeframes of provisional liquidation, the court order being granted, and then, the plan being adopted by the creditors. However, that was, so it wasn't business as usual. And as a result of that, when the acting CFO goes through the audit findings and the results of the internal control environment, particularly, while we have an improvements, year on year, there are still audit findings that require an investment in people and systems, and is something that we will be looking at going forward. However, there has been an improvement. I also want to highlight that, from a governance perspective, the business rescue practitioners replace the board of directors. They are the accounting authority, so there hasn't been an audit committee. But during business rescue, there is a moratorium in terms of external audits. And, you will notice, or you may know that, other organizations, other SOEs who have been in BR, it's at the end of the BR process that the organization then plays catch-up for the years under review that the business was under BR for those financial statements. This was not the approach of SAPO management and SAPO's business rescue practitioners. We felt it was still good governance to have an external audit being done, albeit that it was late. And the reasons why we did it later was we wanted to have the best possible outcome on the numbers in itself, which Lenny will touch on, where we recognized the creditors' compromise or the reversal of what we paid the creditors to what was owed to the creditors. In addition to that, the benefits of having the audit done was that it was used in the TERS application. It was a key deliverable in the TERS application, which has now been successful. So there were some benefits, but the organization is still under a work in progress. On that note, I will hand over to Lenny Govender, who's the acting CFO. Thank you.
Thank you, Fatima. Good morning to the Honourable Chairperson, Honourable Members, and to the Minister and Deputy Minister and the colleagues present. The next slide covers the annual performance plan. So in terms of SAPO's annual performance plan, we had 10 key areas that we measured. And in those 10 key areas, we had 15 KPIs who measured the performance. In terms of the 15 KPIs, we only managed to achieve 2 KPIs. The next slide, we have the details of the KPIs that we achieved. So we achieved 2 of the 15 KPIs, which amounted to 13%. And in terms of one KPI, which was KPI 8.1, we achieved 97.18% compared to the target of 98%. So when we look at the 15 KPIs that was measured for the year under review, the 2 KPIs that we achieved was 1.1, which is again the net profit, and also 10.2 was the monitoring of the turnaround implementation of the plan. In terms of the other 1 KPI as indicated in terms of 8.1 was to maintain the system uptime at SAPO branches. We achieved 97.18% compared to the target of 98%. The other target we did not achieve, if you look at target 2.1, 2.2, and 3.1, those areas were focusing on improving the revenue diversification in terms of the courier business, and even target 4.1 and 4.5.1 and 6.1 was also diversifying revenue we did not manage to achieve. And in terms of target 7.1 and 7.2, 7.2 was achieving the regulated mail delivery standard of 92%. We only managed to achieve 45.15%. And one of the main contributors there, as SAPO was under financial stress, we had to reduce some of the cost base and we had to implement certain austerity measures. And in terms of that also is to balance the volumes that we have to ensure that we need quite a large investment in the infrastructure, especially in the fleet side, to achieve the 92% delivery performance. In terms of 7.2, was achieving the international courier delivery standard of 90%. We managed to achieve 49.6% for domestic and 45.2% for the EMS. So overall, SAP only managed to achieve 2 of the 15 KPIs, which amounts to 13%. In terms of SAPO's financial overview, the slide covers the income statement. When we look at the income statement in terms of revenue, the revenue for the year under review for 31st March 24 was 1.6 billion. So we see our revenue decline by 700 million or 30%. And the main decline comes due to the decline in the postal services, parcels revenue, and also the financial services. We saw the other revenue of 1 billion increasing by 296 million. So when we look at the total revenue of 2.674 billion rand achieved for the year under review declined by 404 million. In the same breath, we looked at our cost base. While the revenue declined, we managed to reduce the cost base. So the cost base of 4.8 billion rand declined by 425 million rand or 8%. And the main contributors for the reduction in the operating costs is the reduction in the staff costs, transport costs, and operating costs. As the BR has indicated, the Section 189 that was granted in April and May, those benefits of those staff reduction, we would see that benefit coming to the 24-25 financial year. So the reduction in the staff due to the Section 189, we would not see that in this reported period. We would see the benefits or the reduction in the staff costs in the following financial year. In terms of the operating loss, so even though the revenue has declined by 404 million rand, we managed to reduce the cost by 405 million rand, which resulted in the operating loss also being marginally reduced compared to the prior year. We had 2.186 billion rand the prior year, and the year review, we reduced by 20 million rand to 2.166 billion rand. So the reduction in revenue was also compensated by reducing the operating expenses. So the profit before tax was 5.6 billion. The main contributor, as the acting indicated, was the 0.5 billion rand, which I showed on other non-operating gains, and it's due mainly to the write-back of the credit compromise. So 7.4 million rand is the benefit of the write-back. The credit that was compromised, so that is written back to the income statement, and that resulted in the profit of loss before taxation of 5.6 billion. We had income tax expense of 310 million rand, resulting in a net profit of 5.3 billion rand compared to the prior year of a loss position of 2.1 billion. When we look at the income balance sheet for the year under review, the main reason why we have the 3-year, because the reinstatement in the prior years, we have indicated that the accounting standard show the 3-year balance sheet. If we look at our current total asset, we are set at 5.2 billion rand. which improved compared to the 4.3 billion in the prior year. We had to reevaluate the properties, resulting the property non-current asset declining from 2.3 billion to 1.7 billion rand. So we had a reduction of 587 million rand. And once again, that is mainly due to the reevaluation of the property, and the same effect in the investment property. Revaluation, the investment property declined from 287 million to 226 million. The cash and cash equivalents at the year was 2.578 billion rand, compared to 543 million. The main reason due to the National Treasury and the Department funding the 2.4 billion rand, the recapitalization of SAPO of the 2.4 billion. So the total was 5.2 billion. Once again, the share capital increased from 8.1 billion rand to 10.56 billion. Once again, that's the main reason, or the main contributor is due to issuing of the shares of 2.4 billion for the recapitalization. And to the right back of the creditors compromised and reduction in the operating loss to the net profit, we see the net asset value is at 1 billion positive compared to 6.2 billion the prior year. And we see the same impact on the trade and other payables. Due to creditors compromised right back, we see the creditors and the trade and other payables declining from 8 billion rand to 2.9 billion. When we look at our financial statement in terms of the cash flow statement, the operating cash of 275 million rand compared to 737 million the prior year. 534 million the cash transfers received as the funding was received from the USO funding from the Department and National Treasury. Compared to the 590 million increase is mainly due to the inflation increase that Treasury allocated to SAPO for funding the USO. So 524 million was received for the USO. So the cash generated from operating was negative at 275 million. So the cash operations utilized cash of 275 million. The proceeds from the financial activities was indicated 2.4 billion is the recapitalization of SAPO. So therefore the 2.4 billion. So when we look at cash flows for the year, it's 2 billion. And once again, the main reason is the capital injection of the 2.4 billion compared to 139 million negative the prior year, resulting in a cash position of 2.57 billion rand at year end. When we look at the auditor's report, the 2023 financial year, SAPO achieved a disclaimer report. We look at a number of areas that was reported, or the significant areas reported in the prior year was 18. And when we look at the improvement for the 23, we have seen a reduction in the year end, where the significant areas reduced from 18 to 10. SAPO still achieved a disclaimer audit opinion. One of the main areas is the going concern, which we see repeated from the prior years. And this is mainly due to SAPO's solvency and liquidity challenges. There are also 3 areas for the property, plant, and equipment that relate to the 22-23, and also in investment property and fund-related system challenges. Those 3 areas would have been resolved in the 24-25 financial year, even in the 23-24. In the 23-24, because the revaluation occurred in 22-23. The revaluation occurred in the 23-24 financial year. So when we roll for the next audit cycle, these areas will be attended to. We also some other areas, for example, the issue of the statement of cash flows and between other payables, those matters will be attended to in the following audit cycle for the 24-25. So 1% of SAPO is the going concern, which affects the solvency and liquidity.
Thank you, Chair. Chair, I would like to end on where the CFO touched on going concern, which was a key finding by the Auditor General and is repetitive year on year. And while we have an improving organization, we foresee that in the next audit cycle, this will remain as a key finding as we proceed with the business rescue plan and the business rescuers towards achieving substantial completion. And then we look at implementing the turnaround strategy, as well as implementing public-private partnerships and sourcing other sources of funding, which should then alleviate over a time frame the going concern. On that note, I thank you and I thank the members. Thank you.
Thank you. Thank you very much, Acting CFO, Acting CEO. and the business rescue practitioners for that presentation. Our last presentation will be from Postbank. Once we've received the Postbank presentation, we will take a 5-minute leg stretch. Then we will come back within the discussions, which we will do entity by entity. Mr. Ngema, you may proceed, sir.
Thanks, Chair, and honourable members. Thanks, Minister, Deputy Minister, and the colleagues in the room, as well as the management of the department. I'll be quick, Chair. The first issue perhaps I should start with is that to apologize. I saw a note in the chat about the late submission, just to explain that we were among those entities who submitted late, and in the main, it was a consequence of the work that we had to do. We had to, as Postbank, reconcile records, manual, and a few electronic, mostly manual, across 5 financial years, and that's the reason why we couldn't close at the time that we're supposed to close. So that all of that is now water under the bridge. I think subsequent audits will happen along the timelines that are expected. That having been said, Chair, we did manage to substantively improve the audit outcome as a consequence. That plus other measures that we had to implement to improve governance within Postbank as a starting point. The second point to make is the obvious point that the committee knows, is that the books were signed off by the administrator as accounting authority due to the situation that was pertaining at the time, which, as the minister said, has subsequently been sorted by having a full board in place, and hopefully that makes us work even better than we did before. The third issue I would want to highlight, Chair, is that SAPO has been talking now, and I think they've spoken to the business rescue exercise, that we obviously had a substantive equity loss as a consequence of the business rescue outcome of SAPO, were the biggest creditor, and that has significantly eroded our equity as Postbank. So that is something that, as the minister pointed out, would need to find ways to attend to, because it creates a sense of undercapitalization by the bank. Having said so, we can attest to the committee that we remain a going concern, and we continue to work on that going forward. So as the board, we can attest that we remain a going concern as Postbank. Then there is the matter of regulatory compliance. I think that the committee is aware that we've been under a variation notice for a number of years as a consequence of some degree of non-compliance with requirements of the regulatory authorities within the banking sector. That's a matter that we're working on. We're continuing to work on. In the year in question that we're reporting on, we obviously didn't conclude that matter, but we made significant progress on that issue, which was recognized by the banking authorities, the banking regulatory authorities at the time. So that's a matter that we make progress on, but it's not a matter that we're able to conclude in that particular financial year. The last point I will raise, Chair, before I hand over to CE and CFO, is that we also then made substantial steps to build capacity in the bank. The bank was challenged to make sure that we improve on our base technology, creating a core banking system, which we managed to do, and the bank was supposed to also build some core skills. We managed to put in place a substantive executive in the bank. Thank you, Chair. I'd like to now hand over to the CE. Thanks.
Morning, Chair, and morning to the members of the honourable members of the committee, to our Minister, Deputy Minister, DDGs, and also our colleagues on the call. My name is Nikki Mbengashi, the CEO of Postbank. Happy to say that I am joined by some executives in the team. Our CFO is here. And then also our chief audit is here, and also happy to say that we also joined by our new chair of our audit committee on the new elected board. He's joined us, I think, just to observe more than anything else, and just to see some of the questions as well. So we'll go through the presentation. Thank you for sharing, Secretary of the Portfolio Committee on your side, if you don't mind, if you can share on our behalf. So I'll start off with some highlights of the business. I'll go through the portfolio performance. Can you hear me, Chair?
Yes, I can hear you, ma'am.
Okay.
Proceed, thanks.
Thank you. Can you please share the presentation, Postbank's presentation? Secretary of the committee.
We've given you co-rights to share, ma'am.
Sorry? Oh, must I share from my side? Okay. No, then I will. Thank you so much. That works better. Thank you so much. Okay. So Chair, if you don't mind, can I switch off my camera? We're struggling with a little bit with connection on our side. We are sitting in one room. So if you don't mind, thank you so much. So I'll share the presentation. Okay, it is sharing. So we'll go through the presentation from our side. I'm trying to open the screen and move it to presentation mode, and yet I am struggling to move to presentation. Hold on, Chair. My apologies. Someone is trying to help me here. The screen is frozen. Oh, close the screen. Close it. Close the screen. Go to the Zoom screen. Close the screen. Go to the Zoom. Let's not share. My apologies, Chair. I seem to be struggling to go to the presentation. It's sharing, but it's not allowing us to move. No, it's not sharing, T. You just went.
We can see the presentation, CE, although it seems to be starting in the middle. CEO?
Perhaps if someone could give me Martin Dowie share rights, I'll share it from my side. I've got it lined up here. And just help Nikki with the tech.
You can share, Martin.
Okay.
Try on your side.
How's that, everyone?
That's it. Thank you so much, Martin.
Cool.
Okay. Apologies again, Chair, for that waste of time from our side. So we'll go through the presentation. I'll start with just a summary of the APP. We'll try and go through it very quickly, and that's and some of the challenges that we had, and then I'll hand over to the CFO of the business to talk about our financials, and then our chief audit will then talk about the audit outcomes, and then as a closing, we'll touch a little bit on the future in terms of the year that we're in, since we are presenting this almost a year later. But we'll talk about then what becomes the focus for 2024. 25. So if you could move to slide 13, Martin, thank you so much. Okay, thank you. So I think the challenges, some of them, the chair, Mr. Kayangema touched on them, but I'll just emphasize some. This year, the business was in the second year of the variation notice, and then in the October of 2023, we were then given the extension, a third extension of the variation notice. And I think that was an indication as well as to the performance at the time in terms of progress. I think there was some context as to why we were given a second extension in the first place, which I think even the Reserve Bank appreciated at the time. When I think in this year, joined in July of 2023, we made some significant progress, and therefore happy to say that we were given that extension. And Mr. Ngema, as he said, some of these things, as much as they were not finalized that year, we've made significant progress on them in this financial year. But the challenges that did come with the variation notice, and you'll see the impact of them on the APP and the performance of them. I think there was one condition that really constrained the business, and that condition was around the inability or the condition to not onboard new customers. That completely eroded our customers. I think the majority of the base of our customers, especially of non-interest revenue, does come from the SASSA customers, and therefore, if that is reduced, as was the impact of the variation notice, we'll see it directly on our numbers, and I think Martin will touch on that as to that impact, as we've seen it in the previous financial year. Therefore, it means that the business did not grow on its revenue, especially on the non-interest income, that much, because we were not onboarding new customers. And as any environment, businesses will lose customers, but the challenge will always to ensure that the delta between what you lose and what you gain is more favorable to what you gain. But if you're not gaining anything, the impact of that is across the business. It impacts your cost to income ratio, because a part of that ratio is that the revenue on top of the top line is impacted. If that's not growing, then it means that you have to manage the cost of the business. But also managing the cost of the business, you can only manage the cost of the business to an extent before you actually kill the business. And that's the balance that Postbank had to manage. And then the capacity constraints, I think the biggest one here was really around capacity in terms of skills and experience and capacity in totality. The business is running at about almost 60% in terms of a gap in the vacancies as to the approved structure. We have an approved structure from 2022, but we still have a long way to go in filling that structure. But I think it was a blessing in disguise to an extent, because as we now onboard the new executives, we are reviewing that structure this year. We'll take it to our board because it does need a overhaul completely, because it was not the right structure for the business. And therefore, the high vacancy rate as well was a combination of that structure not being correct, but also the fact that we didn't have enough executives to really drive the filling of the vacancies. I think the other biggest challenge in the business is lack of banking skills. I think all of us know the history of the bank, and as a result, we can see that in the skills that we have in the bank, it's improving. The chair has spoken around the impact of SAPO and the exposure that the bank had to that. Operational challenges, I think the bank, I think the most one which impacts the customer experience, and of course the really what a bank should be delivering to our customers. The fact that we did not have any presence in terms of proper branches across as a bank. Yes, we've used the SAPO branches, and I think they've carried the bank quite well in the past, but it really, in terms of servicing what really a bank should service to the customers, that is a challenge, and we're building on that. I think the fact currently that we have over 350 350 sites across nationally is a good start for the business. And then I'll move over to slide 18, where we talk about the actual, and we focus now on the performance for the business. It does not look good. Overall, the performance of the business for the year, you can move to the next one, Martin. For the year, the overall performance for the year was 12%. But if you look at actual targets that were put for the business, they were quite impossible. And maybe it's worth mentioning as well here that as soon as we joined, some of the executives, we did to try and change the APP at that time, because we felt it really did not speak to the business and where it is. And when I touch on some of the objectives, I think you will appreciate, and it's reflected on the outcomes that we see here. So maybe let me touch on some of them. You can go to the next slide, Martin. So some of them, they show the impracticality in the impossibility, next one, all those outcomes, and I'll touch on some of them without wasting time. For instance, if we talk about these, there was, by the way, we did apply to see if we get an opportunity to review the APP. But I think the timing and the process that would have taken, the view was that it was a bit too late to review. So we had to adopt it as it is and try and work as much as possible. But I'll talk about the fact that even though we felt that the APP that we inherited did not speak to the business, what then did we do? What were the things that should have been in the APP in our view, and how did we perform against those things? Because it's quite important that we did not just leave it at that, to say the APP doesn't make sense, it doesn't speak to the environment and what should be priority, but what did we then focus on? For instance, the APP talked about a submission of the Section 16 license. There was no way that the business could have done this. We're still under the variation notice. We're nowhere near finalizing the variation notice. Hence, we required an extension of another 15 months. So there was no way we could have submitted this. And then you'll see some of them, some of these deliverables, for instance, the 1.61 channel strategy. Again, there was no way that the business could have improved on the channel strategy in totality, because we didn't even have the executives at that time. When I joined, the business only had the HR executive and just a few of the 8 to 9 executives that are required in the business. You can move to the next one, Martin. I just want to highlight some of them. And perhaps to the next one, I want to talk to the financial ones. For instance, in the financial ones, I've already mentioned that the business was not onboarding any new customers, nor was cross-selling to customers, nor was there was no opportunity for us to develop our revenue. And yet the targets that we put did not speak to that limitation. In fact, they spoke to a business that did not could do that, as there was an expectation that there would be an increase in both our depositors, non-interest revenue, and across, and the fact that there was an expectation that even at the time there would be a reduction on the cost to income ratio. And when we talk about the exposure to SAPO, you'll see the impact on this. And when we talk about again the fact that we didn't increase our revenue, there was no way that the cost to income ratio could have improved. It had only one way to go, but to be on the negative side. I think move to the slide 27, Martin. Then I'll talk about, so what did we focus on as executives, since we knew that there were limitations around, or rather the APP in our view was not reflective of the status of the business. So these are some of the projects that we had. I think we put together about 9 or 10 projects that we believed should actually have been the APP, bearing in mind where the business was. One, if you notice the APP that I spoke to, it does not have the variation notice, and yet that was the main thing that the business need to get over. And therefore, we put all our efforts in resolving the variation notice. Happy to say that the fact, again, that we got an extension, and the fact that of where we're at now currently in this financial year, it means that all our efforts showed some progress. De-risking from SAPO, I think at the time, the business did not have a strategy as to what happens, because we knew that the SAPO was under business rescue. We knew that there was a reduction in their branches. We knew that they had a dependency for funding, and there was no guarantee of the future. And yet the bank had so much dependency on SAPO at the time, but there was no focus on the bank as to how do we de-risk from this risk that we foresee in the future and the uncertainty of SAPO at the time. So we worked on that. There were some channels that we had to close that had dependency on that. We had a data center that we were using that was SAPO. We had to work around how do we move away from that data center, and also just how do we manage the payments around the SAPO branches and reduce the reliance on that. Road to Green, this was quite important
CEO? CEO, we are losing you. Martin, can you please just intervene there because we can't hear the CEO anymore.
I'm unfortunately not in the same location.
3 years of disclaimer audits. Obviously, this needed to be a focus as well from the business. Oh, sorry, Chair.
Maybe she could repeat, Chair.
Now, Chair, this is what we're talking about, our network. I'll try another laptop. Hold on. I'll try another laptop. Hold on.
It sounded like you were back, Ms. Mangashe.
Can you hear me now, Chair?
Yes, we can.
Thank you so much. Thank you. Sorry, Chair. It is our network here. We are struggling today with network. So the road to green, again, that was our focus to say, how do we take ourselves out of the disclaimer? Happy to say again, there's results. And again, since we're de-risking from the SAPO branches, we had to say, what were the quick alternative channels that we can put in place to ensure that we service our customers, but also how do we work to SAPO in the sense that even though they were reducing their channels, those services that they still provided, how do we optimize on those? For instance, our depositors are still using the SAPO branches, but in terms of the process and the controls in that process, and ensure that we reduce fraud in that channel for our customers in terms of putting both ourselves and SAPO, putting the controls that we need on both sides. So that was the work, but also other alternative channels, whether it was to communicate to the customer or to service the customers. And I think one of the results of that are the 350 sites that we're seeing in the retailers, because we had to work with the retailers, we had to work with some introduction of spaza shops as well to ensure that we increase servicing channels for our customers, alternative channels. Funding of the bank, I think this is the one that is still a challenge for us, be that as it may. During that year, we did go to Treasury 3 times, as was the part of the project. We went repeatedly 3 times to ask for funding. All 3 times we were unsuccessful. So this is still a big challenge for the business. But as it was part of the project, we did perform on it. But unfortunately, the results were not positive. The next one, Martin. IT stability, this was important from us. And again, I think it's worth emphasizing all of these were not in the APP, but yet I think all of us, as we read them, they become so obvious as to where we know where the bank is at and the fact that they needed a focus. And again, happy to say on this, since we had the glitch in September, which by the way was part of us improving IT. It was just unfortunate that the project and the transition from one system to another did not happen as planned, but the whole objective behind that was that it was part of the improving the stability. Happy to say that we've never not paid especially our beneficiaries. We've never disturbed their payment or no had any inconvenience to them since. So we've also improved this and we keep on improving on this. And I think again, when we look into this current year, because we talk about most of the variation notice also required a lot of IT overhaul. And when we report in this financial year and we talk about where we're at with the variation notice and the work that we've done, it will show that we did not even stop with this in that last financial year. We continued with it. Capacitating the bank, again, happy to say that we did great work here. The executives, we have the business for 9 years did not have a permanent executive team, nor even a CEO for 9 years, and a CEO, acting CEO for 9 years. CIO had different CIOs, 5 different CIOs in that 9 years, some of them acting, no CFO, CAEs. So happy to say we have a full complement of ExCo as we speak now, except for the CRO who just resigned. So again, we achieved this and we keep on improving on this. Governance and fraud reduced this by 80% year on year, and we keep on improving on this. Customer experience, again, I think we have a long way to go here, but we have created sustainability in terms of delivering to the customer, but still a long way. And I think same as contract management, I think here it's a matter of skills, capacity around our supply chain, and also I think the tools and the systems to actually manage this, because all of the work that Postbank does currently is so manual. So it's about we need to move to automation to really help with some of these. So those are the projects that we believe should have been in the APP, and we achieved I think all 10, but probably 2 of them that we did not get to the point where we wanted to get, but happy to report that we did well on them. And then I'll hand over, Chair, to the CFO to also focus on the highlights in terms of the financials. And then after him, the CE will talk about the audit outcomes. Thank you, Chair.
Just making sure my tech's working. Good morning, everybody. Just go to the right place. So I think I'd like to start off with just an overview of the balance sheet metrics first. If we look at our core assets and liabilities on our balance sheet, starting with the liabilities, so the funding that we receive from our depositors, that was very consistent and stable year on year. So total deposits were 9.8 billion for the 24 year end versus 9.6 billion at the previous year end. So a very, very stable funding environment with regards to our deposits. Other liabilities on the non-core side, there was a small variation there year on year as some accounts payable increases and provision increases ticked up. If we flip over to the asset side of the business, so what did we do with the funding that we received? That we invest in high credit quality, short to medium term assets, being things like negotiable certificates of deposit, promissory notes issued by local banks, government debt, etc. That was also very stable year on year at approximately 9 billion for both years under review. Allied to that environment, the 2024 financial year was one of an increasing interest rate environment. So when we drop over, I'll come back to the SAPO exposure. When we look at the P&L, I think the context of the year's loss of 1.2 billion relative to the 1.9 billion the year before needs to be understood in light of the significance of the impact of the SAPO business rescue finalization, resulting in us incurring an additional write-off of roughly 1 billion rand in 2024 year end. And there was also the start of a significant, let's call it cleanup exercise, where a lot of prior period errors and adjustments were necessary to rectify material issues from the past. So as I mentioned, the loss of 1.2 billion of that credit associated losses were 1 billion, whereas in the prior year, the 1.9 billion credit associated losses was 2.3 billion. So relatively close to the total amount. If we unpack the P&L and break it down into the two sort of core components of our business, A being net interest income and B being non-interest revenue or net fee income. On the interest side, as mentioned, the interest rate environment was positive for the year. That allied to a good selection of products in terms of our investment portfolio yielded a favorable 62 million result in terms of the net interest income year on year, where we went from 552 million in 23 up to 614 million in 2024. On the non-interest revenue side, so this is the fees that we earn from transaction costs and from the SASA contract that we have to service the payment of grants to beneficiaries. Here, the gross fees that we earned, 1.3 billion in 2024 relative to 1.5 billion in 2025, so slightly down by 0.2 billion year on year. The main contributor there is customer volume. So number of customers has reduced, and what we see then on the transaction costs, so these are the costs that we incur in order to earn that revenue, that moved from 0.8 billion as an expense against that revenue in 2023 down to 0.6 billion, so a 0.2 billion favorable increase. If you net those off, you end up with a very stable and consistent net non-interest revenue for the year. On the cost side of things, what we see is that there was quite a significant increase in costs from 1 billion the year before up to 1.7 billion in the current year.
Sorry, Martin?
Yes.
Sorry, you're not speaking to the slides. I suspect that you're still on the previous slide and you've moved on. So let's just try and ensure some alignment there. Thanks.
Okay, well, I'm talking costs, so operating expenses at this point in time. So I think I'm back on track. So from a cost point of view, the total cost, as I mentioned, was 1 billion for the 2023 year and 1.7 in the 2024 year. And the two main contributors to the increase in the cost base was the costs incurred for us in terms of cash in transit fees. So this is where we need to move cash to various sites around the country to facilitate the payment of cash grants to beneficiaries. That was 200 million up year on year. And then also the cleanup exercise that I mentioned yielded some additional losses and write-offs of circa 300 million for the year that you'll see in this line item, material losses and other write-offs in the middle of this slide. And in the cash in transit, a little bit further down. And I've listed out for everyone's consumption the other main items, but I don't think we need to go through each of those individually. On the staff cost side, staff costs increased from 156 million to 181 million year on year. That comprises two main components, what I'll call core compensation related costs. That increased by 14 million year on year, which is mostly inflation, pay scale adjustments, and a change in staff mix as we appointed the board and the exec, sorry, not the board, the exec members, as Nikki mentioned earlier. The other component of total staff costs is the leave pay accrual, which increased by 11 million year on year. That was mostly as a result of untaken leave with regards to all the cleanup projects, etc., that the staff were engaged in over the year end. And then just as I've noted at the bottom, I haven't specifically put a slide item in again for the impairments, but there was a net billion for the year, as mentioned earlier. Wasteful and fruitless expenditure, so it's just an overview. The total amount that we reported or disclosed for the year was 85 million. when I dived into what that comprised of, I noted that 48 million related to actually 2023 events that were only recorded in 2024. I've listed out here the majority of the items. So a lot of them were penalty related, coming on the back of the SASA contract. So it's legacy items. And then we had to destroy some of the cards, the gold card stock that we had, which was 25 million of the total. Okay, I'm going to flip over to the next slide. So this slide really represents a hypothetical scenario whereby if Postbank did not need to write off the SAPO related receivables, what the net equity and the capital adequacy ratio of the entity would look like. So the yellow column is the actuals for 2023 and 2024. And then if we add back the effect of the write-offs, we go from a 1.2 billion loss to a much smaller loss. But the important item is the total equity, goes from negative 160 million back up to 4.1 billion with a capital adequacy ratio of 77%, which is a very healthy business. I think the next few slides are just really some color around the audit delays, which I don't really want to go into. We've, I think, already mentioned that the financials were delayed due to a backlog of reconciliations, etc.
Thank you, Martin.
I think that's me.
Yes, we'll hand over to our CAE.
Thank you. Slide number 46, Martin. Thank you. On the outcome of the 2023-2024 financial year, Postbank has been able to improve an audit opinion on the financial statements from a disclaimer to a qualified audit opinion. The performance information achieved a material finding. There was a finding in relation to a process that was not documented to measure the KPIs. There's also an issues around SCM on the compliance side, which were noted by AGSA, which has resulted in material findings. Next slide. In the 2024 financial year, for Postbank to improve an audit opinion, there were 20 audit findings that were identified for resolution. Of those 20 audit findings, 18 were successfully resolved and 2 were outstanding. However, those 2, they were mitigated, which didn't result in any issues around those 2 findings. There were 3 findings that led to a disclaimer. The biggest one being the reconciliation between IGPS and BankServ stemming over 6 years. This is the finding that resulted in Postbank not being able to submit the financial statements. The delay was as a result of the volume of transactions that were being reconciled and the availability of information at a point in time. Postbank successfully resolved this audit finding with no issue in it. Hence, we were able to improve an audit opinion. Next slide. We identified 22 findings for us to improve from the 2024 audit opinion as we approach the 2025 financial year end. We had 1 audit finding on the annual financial statements, which resulted in an unqualified audit opinion. This finding relates to a reconciliation of an account between Postbank and SAPO, and Postbank is in progress to resolve this issue. going into the 2025 financial year. There was a finding on the late submission of financial statements. We have prepared a plan to ensure that by 31st of May, we submit the financial statements on time. And then one finding on the performance information, this relates to documentation of standard operating procedure. We are also in the progress of closing that. That should be closed before the submission of the financial statements for the 2025 financial year. We had several supply chain or procurement issues which resulted in non-compliance. We are currently at an advanced stage on the investigation of the findings that were identified in the 2024 financial year audit, which we are expecting a preliminary report by the end of May, of which will be followed up with the consequence management around those findings. With the resolution of these audit findings, we expect to improve our audit opinion to an unqualified one, also minimize the issues around the supply chain. Thank you. That's the end of the presentation.
Thank you, Chair. I think in summary of Postbank, as Martin, I think, showed on the financials that the impact of the unfortunate exposure to SAPO and the 12 cents to the rand resolution impacted our capital adequacy. I mean, our capital adequacy without that impact would have been way over the required 29% from the Reserve Bank. In fact, over 60%, very high. Cost to income would have been looked totally different as well. Also, I think operationally, the focus of how to improve the business, we've done that, and I think the outcome of the audit after 3 years of disclaimer are also testament to the work that the teams have put in terms of sustainability of the business, bringing in leadership. I think very happy in terms of where we're at, especially the ExCo level. The focus, of course, is on the next levels. I think as a closing statement, I think, can you share, Martin, slide 75 for me? Sorry, I think you've already took off the presentation. Just as a closing for us, it's just talking about the future of Postbank. Martin, are you there? Is he gone? Okay, that's fine if he's gone. Maybe he's moved away from his laptop. But I think for us, thank you so much, Martin. For us, it was just saying our strategy stands as the bank. We have a 5-year strategy, and those are the 4 focus areas as the bank. We always talk about financial inclusion within South Africa is still critical. I know there's always a debate whether South Africa does need another bank, but if that was not the case, we would not be sitting with people who are still sitting in rural areas, having no access to financial capabilities or access to any financial freedom in that sense. And of course, our focus is that we don't only focus on the individual, but when we improve the individual, we expand that to the community. And therefore, our strategy does focus as well. How do you improve the community around the individuals as you make them financially inclusive? What's the impact to the community? And then when you talk about sustainability, for us is that it's not only a once-off. Whatever interventions, whatever we do, there needs to be sustainability and protection of that financial improvement. And therefore, that's the third pillar of our strategy. And of course, the future, the general impact through financial literacy, for us, it goes beyond just literacy in terms of teaching people, but how do you start at the point where even you include financial literacy at a high school level? How do you support financially students so that you don't have the need to educate people around financial literacy in the future? And again, every intervention that Postbank is focusing on is about creating sustainability in whatever we do. And then just as a closing slide, 77, We have a plan in terms of how do we implement that strategy. Slide 77, thanks, Martin. We believe that there's 3 phases to the implementation of the strategy. We are in the process of finalizing the stabilization as it ends now in September 2025, because that was an 18-month 18 months that we've given ourselves to stabilize and to start building. And then we are about to move to our growth stage, and then of course a differentiating stage, and of course there'll always be overlaps around those. But happy to say that I think the stabilization of the bank for us, we certainly feel that we are certainly achieving that, having touched on the variation notice, the IT stability in building capacity and capability, new structures, that's all part of the stabilization. And as we build that foundation, it then gives us a springboard to grow the business and the customers of the business, and in terms of how we interact with those customers. Thank you, Chair. That's it from the Postbank. Thank you so much.
Thank you. Thank you, CEO and the executive team, also the chairperson, Mr. Ngema. Each time you said lastly, as a closing, I was like, this one sounds like us. Always closing, never closing. Colleagues, let me thank you very much for these presentations. I think across all entities, I do want you to know that as a committee, we appreciate, firstly, the work that you are doing. These entities, many of you would have inherited them in the conditions that they were in. Despite anything that may be said, I would never want the executive teams to think that we don't acknowledge and appreciate the work that is being done to try and turn them around. I mean, a number of you have recorded improvements in the audit outcomes and set out clear visions on what needs to be done going forward. So that is truly appreciated. It is 11:10 now. I would like to give like 5 minutes just for the members to collect their thoughts. We resume at exactly 11:15, where we will have an hour for discussions. So that is both the questions that are put by the members as well as the responses. Please, let's try and stick to it so that we then leave 45 minutes at the end for the last presentation. We'll push it to 30, time allowing. Okay, so let's adjourn for 5 minutes, and then we will start with questions to SITA, then followed by Broadband Infraco, SAPO, and Postbank in that order. Thank you, members.
Thank you, Chair.
Thank you, colleagues. Hope you managed to just get some stretch time. Let's not waste any time then, and go straight into the discussions. I would really, if we're able to manage it properly, I would wish to take questions for SITA, get responses, and then the next one and the next one in that manner. Can I see hands for engagement, colleagues? I see you, Honorable Subrathi. We are on SITA, colleagues. Any questions for SITA? Honorable Shongwe. I'll take other hands as they come. Honorable Subrathi, you may proceed.
Thank you, Chairperson. Chairperson, can you confirm if I'm audible and if you can see me clearly?
You are very audible, but it is a big black square where you are.
You can't see my big beard, that means.
Trust me, I wouldn't miss it. I think there's something with your video there.
Okay. Chairperson, let me not delay the process because I am let me just see. I've undone the video. I'm not too sure why. I can't even see myself. How about? Anyway, let me proceed, Chairperson. Chairperson, you said we're starting with SITA first. Chairperson, let me welcome the presentations and also echo your sentiments that we do appreciate the hard work that goes into by these various entities and the effort we see in terms of improving it. Chairperson, let me begin by saying that SITA is clearly entrenching systematic changes to its governance and operations output, and there has been progress, and there's certainly tremendous room for growth. And I want to really talk about a matter that is of current. The regulations that are proposed by the minister would appear to undermine the work of the board and the executive have laid. So my first question will be, what would be the sentiment of the SITA board regarding these proposed regulations of the minister? And secondly, Honorable Chair, does SITA representatives believe that the decentralization strategy of strategic services from SITA will still allow SITA to continue functioning? And maybe a third question would be related to that is, I'd like the committee to be taken to confidence in terms of what is the progress thus far in terms of appointing the SITA board, and maybe a little bit in terms of the skill set that is being sought. And maybe follow up to that question would be whilst we appoint a new board, we also need to be mindful of the time that of the fact that we need to then give this board time to resuscitate and revitalize SITA. And I'm in a bit of a conundrum against what they are expected of them versus the threats of decentralization that the intended regulations of the minister poses. So I really need to get to sense with them, hear from the board, what do they feel, their reflections on this when the new board is appointed, maybe what is a fair time that they would think they would like to have to revitalize, and maybe linked to that is, can we fix SITA? I think that's the critical question, and I think maybe the minister's intentions of the regulations are built around that SITA in its present form cannot perform its services, and we understand there are certain systemic challenges, and I've alluded to that. The body is trying to make an attempt. So that is largely, and maybe just on the regulation side, Chairperson, before I was preparing for this meeting, I tried to get sight of the regulations that the Honorable Minister has alluded to when he appeared before the Portfolio Committee. The last time he indicated it's quite close to being gazetted, and I couldn't find it on any public platform. So maybe where are these regulations? If the department please inform us, where are these the regulations? Maybe let's move beyond the SITA regulations. You just talk specifically to the presentation. In light of the concerns raised in the audit about the financial performance and internal controls issues mentioned on pages 17 and 23 and 24, maybe my question would be how can SITA truly live up to the promise of having a zero tolerance for fraud and corruption, as they speak of, whilst also dealing with these ongoing governance challenges? And maybe what specific reforms have they introduced or are introducing to improve accountability, and how will we measure their success? We know, Chairperson, that SITA's corporate performance score improved from 44% in the last review to 61.9% in this year, as seen on page 10. However, it's also worth noting that 38% of the targets were still met. So why does the organization continue to set targets that depend on outside factors? And these are highlighted on page 8, especially when these are historically showing that there's a high chance of it not succeeding. Should SITA therefore not adopt a more cautious approach in target setting? Or could this slow down progress in digitizing public services? Thank you so much, Chairperson, and I'll pause here.
Thank you very much, Honorable Subrathi. Honorable Shongwe.
Good morning, Chair, and good morning to the colleagues, Minister and Deputy Minister, and the officials at large. Chair, I won't be long when it comes to SITA. Just a few questions. And basically, it's because of the reputation it has of being a corrupt, maybe if I may say, entity, or corruption is happening, too much corruption is happening there. It's the perception, Chair, that it and the stigma it has. So I'd like to ask Chair Uguti, when they spoke on their presentation, which I welcome, I understand that they have inherited something very, very difficult to even mention by name, which what have they inherited. I want to know, Chair Uguti, she touched on the recommendations from the AG. And she never said what were those recommendations, but they said they intended to implement them. So I want to know what were those recommendations, and if any the recommendation did from the AG, did they have any corrupt pickups on those recommendations? Did they pick up anything corrupt on the financial management? And they also spoke, Chair, on the weakness identified in the financial management. Still on that, Chair, I want to know, Uguti, do they mean the financial mismanagement they're speaking about? Is there any corruption picked up on that mismanagement? And what have they done, or what are they willing to do in getting that fixed, Chair? And the last question, Chair, always when you speak about SITA, Chair, you don't find comfort. You somehow have this thing, Uguti. Everybody feels Uguti SITA is where corrupt officials will just go work there, get money, and then leave. And then as they leave, they will only write statements. Nothing will be done to them. Are there any arrests on the corrupt activities at SITA? Because, Chair, for us to turn around SITA, if we are serious about turning SITA around, or if they are serious about turning SITA around, they should be speaking into which we have arrested so many people who have stolen money, and this is the direction that we have taken. NPA has done this, police have done it. But when it comes to SITA, Chair, you only hear the allegations of money being stolen, and nothing after that, and nobody to account, no name mentioned to which this person did this and all that. But there is that reputation. So I would like to ask Chair Uguti, if they are serious about that, what have they done, and who has been arrested, and how many cases are there that we need to do a follow-up on and understand Uguti they are giving AMA results on that. And then the last thing, Chair, I wanted to ask, how far is the process of the new board, Chair? Also, Honorable Subrabi has also covered me on that. How far is the process of the new board? And I think I'll end there, Chair. Thank you.
Thank you very much, Honorable Shongwe. Honorable Alicia.
Thank you very much, Chairperson. Good morning to you, the Minister and the Deputy Minister. I don't know if they still are in our meeting, and my colleagues. I just want to understand, maybe first, Chairperson, why SITA did not manage to fully complete the first phase of the court online project as it was planned. I think I want clarity on whether it was because of the budget issues or technical problems, or maybe the lack of skill. I just need to understand over why was that project not fully completed in the first phase. And again, Chair, SITA tells us that it managed to achieve 100% on its digital infrastructure project. I'm interested in knowing, like maybe in them giving clarity on how they achieved that, because we are fully aware as this committee that there are challenges at SITA, and there is the staff morale. It is reflected in their presentation that it has dropped. So what is it that they do? What is it that they did to achieve that? Yes. I think now this leads to my next question. The staff satisfaction dropped to 68%, right? And I think we've asked this question a lot of times in terms of like, what is SITA doing in terms of like boosting the staff morale? Was it, in this case of them dropping, was it because of the workload? Was it because of the poor leadership that we hear about every time we come to this committee? What are the challenges? So maybe if they clarify to us, maybe it can lead us like to possible solutions. And maybe the last one, Chairperson, with the profits at 9% instead of like 10% goal that they had planned to achieve, I just want to know how SITA is planning to stay financially healthy. And I think I asked this even in our last meeting. How is it that, or what plans do they have to make sure that they stay financially healthy? Will they cut costs? Will they raise prices? Or will they find like new services to offer? What is on their strategic plan to ensure that they stay financially healthy? Thank you very much, Chair.
Thank you very much, Honorable Elisha. Honorable Sithole.
Thank you, Honorable Chairperson, and greetings to all members and the staff and the presenters and the Minister and Deputy Minister. Honorable Chairperson, I think, first of all, we have to appreciate the report from both presenters and from both their entities, because it shows that there are some work that they have been done, and then they are doing their best, because you see things are very tough in their actually portfolios. But Honorable Chairperson, I have only few questions, but my first one is the issue of SITA. If the SITA can actually give us comfort about their failure of achieving their target, because it shows that they did fail their target. If they can give us comfort, do they have any program or any strategy to deal with their achievement of their targets? And the other, Honorable Chairperson, is the issue of cyber security. If they can show us the idea to challenge to actually deal with the challenge that they are facing on the cyber security, Honorable Chairperson. And the bigger one, Honorable Chairperson, is the issue of illegal expenditure, fruitless and material losses on SITA. If they can address that one, because it is actually the one is actually crippling the operations in most of the department. If that one can be actually assessed, and if they can give us their strategy on that one, and they give us the outcome, what their projection on that. But there is another question which was asked by Honorable from MK. I don't know.
Yena leyo shongwe.
Honorable Shongwe. About
Siyawamukela.
yebo mngani wami kunjani? About the consequence management, because if they done this electoral expenditures, fruitless, wasteful expenditure, but there is no proper management, I think that one will be a fruit waste for us. And the other honorable Chairperson, I'm worried about the issue of written off of some of the materials, because that one, if they can give us how much did they rate, if the mandatory they were written off, or other than the materials that they were written off, and how much that one was costing, if that one can be, because even the issue of criminal conduct, if they can give us how many, as Honorable Chong have asked, how many have been arrested, how many have been discharged, all this information, Honorable Chairperson. And on BPI, Honorable Chair, I think that the same thing, electoral expenditure of 16
Sorry, I'm
million.
going to stop you there, Honorable Sithole. Lisa Job, I just want us to finish SITA, get their responses, then we'll come back to the others.
Okay, thank you very much.
Thank you, Honorable Sithole. Honorable Botlani?
Well, Chair, I like that system of asking per entity and getting responses. I really like that. Chair, I missed the better parts of the beginning of. I do not want to ask questions perhaps already being addressed. Mine moving to go back to the market to sell themselves. With the regulations being amended and everything happening around brand SITA, what engagements are they having with their respective stakeholders that will also ensure that at least that they keep the clients that they have, that SITA has become synonymous with poor service. So on a marketing point of view, from a marketing point of view, what are they doing to ensure that brand SITA remains? I only had that question for now, Chair.
Thank you. Thank you very much, Honorable Botlani. I think I'm not going to engage much as well, given the fact that these reports are quite old. But linked to what Honorable Botlani is saying, you reported a 90% service, 90% implementation of your service improvement plan. Can we just get a sense of what that means practically, as well as 100% compliance to your complaints and I'm not sure now what you call them, but I think that's the resolving of complaints and issues that are arising. So linked to Honorable Botlani's question, if we could get responses there. Minister, if you can direct for us, please. Thank you. Oh, sorry, let me also welcome the DDG. I understand she has now joined us in the meeting. The minister is still here, I'm assuming. Minister?
Yeah, I'm still here, Chair.
Thank you, Minister.
Thanks very much, Chair. Perhaps let's take the approach that let's let the entities do the responses first, and then I will wrap up on the direct questions that were posed to me or that require ministerial response. So can we then take that approach, Chair? Thank you.
Thank you very much. Chairperson Mudau.
Thank you. I will start, and I welcome the questions from the honorable members. I will start with the one posed by Honorable Suprapti. Last time when we were here, and a similar question was posed in terms of the impact of the regulations on SITA, we did express that the board had expressed concern to the minister. And as of now, we've also taken a formal position that as part of our fiduciary responsibilities, we have to make a formal submission because, as I've indicated previously, the regulations do have a significant impact in terms of chipping away from the current 37% a market that SITA is servicing. So in that particular regard, there is that work that is underway that we'll be submitting to the minister formally. And you've also asked the question of, can SITA be turned around? I think correctly so, it can be turned around, and the board has been working with management on various aspects that are currently a pain to a lot of the clients, because we do believe the institution can be turned around, from improving governance to improving the service offerings to improving turnaround times. And that's why automation and various reviews are currently in place. And you also tied it to what extent or what's the reasonable time that one would expect for such a turnaround to be of effect. And maybe to that, I would certainly say it is not 3 months. But maybe let me link it to what the Companies Act provides when it comes to turnarounds. Maybe, I know we're not under business rescue, but Companies Act would usually allow like 18 months that it would take that much time for an organization to go through a turnaround time. And yes, SITA is not under that particular regime in terms of business rescue, but I would think a reasonable period should not be less than 12 months to at least see and give the board an opportunity to effect some of the improvements that are currently being worked on. So as I've said, the decentralization of some of the services that have been offered under the current legislation certainly would impact the revenue that this entity would generate. And we know when we speak of revenue, it filters down to then what are the costs that then can be carried under the reduced revenue that would then would have materialized. So I think in summary, Honorable Soprati, the regulations do have that impact. And yes, the organization can be turned around. And yes, the board would require time to effect that particular turnaround. I think I will leave the question that you asked on the timing of the board and what that particular board should be, the period that they should be allowed, maybe to the Honorable Minister and the colleagues in that particular regard. The other question that you asked was, how is SITA enhancing accountability? Because it's one of the, it was a common thread in some of the comments that have come through. I think we are working even currently in terms of, you would have seen in the presentation that the extent of accountability, especially when it comes to even audit matters, when it comes to some of the considerations that board is making and the executives are signing off, there is follow-ups to ensure that certain things do not fall through the cracks. But not only that, we also hold to account in terms of the turnaround times that would have been undertaken by the respective functions. So there is that level. And I know you spoke to what extent are we also ensuring that we communicate a zero tolerance threat stance when it comes to corruption. As this particular interim board, we've had engagement with all levels of management. And in that particular engagement, one of the things that was expressed was the fact that we definitely will not tolerate corruption. And we are, as part of a stakeholder engagement plan that we currently have, are engaging different stakeholders. As one of our key stakeholders is our staff, and we'll be engaging so that the same information in the position of the board can also be communicated to different lines of business. So there is that position that the interim board has taken and is implementing in that particular regard. You've also talked to the aspect of to what extent are we handling or even taking actions in terms of some of the investigations or holding those that are found to have been responsible accountable. I can certainly assure that out of around 64 allegations that SITA currently has, around 65% of those, 42 of those have been fully investigated. And out of those investigations, and I can confirm that in 23-24, around 11 cases have been acted on. In 24-25, which is the current financial year that we've closed, around 8 have been finalized. And in the 22 that is currently underway in terms of investigation, and there are various stages, a significant portion of that is already at reporting. Some are at planning, but at different paces. And I think that is demonstrating that there is efforts that is being made to accelerate investigations, but also to ensure that action is taken where the reports points to that. So that efforts is underway, and the results, I guess, in time will show. I think Honorable Shongwe spoke to the recommendations of the AGSA on the 192 findings that are there. Honorable Shongwe, there are different recommendations. And again, on the presentations, you would have seen that as part of implementing those particular recommendations, we are enhancing controls. So there are various controls that are being designed. What we're also doing to ensure that those are suitable controls that would achieve what we desire to achieve in terms of enhancing the control environment. Internal audit is actively reviewing that with management, and we're only accepting, you would see what was reported there. It's only those controls that have been signed off by internal audit that they have been correctly designed, and they would ensure that there's enhancement in the control environment. Another one that I want to talk to is you referred to weaknesses in financial management, and just a slight correction there. It was more weaknesses in financial reporting, not financial management. You would have seen that from the results that were shown, even though they're disclaimed, SITA is still solvent, SITA is still liquid, SITA has been collecting, and yes, there's been challenges in that regard. And as I've highlighted when I spoke earlier, that one of the areas that the AGSA did not have findings on was on liability management, which then talks to the fact that there are effective financial management processes. I think there are weaknesses on the reporting side, and those are some of the controls that are being built in, and then it will also then reflect overall, even in the audit outcome. The other one that you spoke to, and I know we raised this previously, in terms of what are some of the active cases that are there. I think earlier when I spoke, I said in terms of the material irregularity that has been raised in 2021, that particular case has been referred to SIU, in as much as it was not done by SITA, it was done by the AGSA. Out of the investigations that I quoted, around 42, there has been some of those that are linked to fraud, and I can confirm, honorable members, that there are actions that are still underway in that particular regard. To the question that Honorable Felicia raised, the AMD is going to talk to the court online, a question that you raised. I want to talk to what your observation of saying it is commendable that SITA, despite the challenges that are there, that are known, there was still an achievement of around 62%. And you are correct, ma'am. It talks to the fact that the board, as well as management, had and is still continuing to put measures to ensure that what has been committed to from an APP perspective, those are prioritized and those are delivered on. And I think it just talks, the results talks to that, and that's the improvement of around 40% between the year 23 and 24. And we're hoping that the same will continue. You also raised a question on profitability. You expressed concern on the profit of around 9 to 10%. Honorable Felicia, that is not at gross profit level. At gross profit level, SITA averages around 28%. That is at earnings before interest, so at EBITDA level. And you are correct that at 10%, can it be enhanced? If you look at the industry, and they are more, not far off, but let's say around 15 and all of that. So yes, there is an opportunity to enhance the EBITDA margin, and that would mean the process that is currently underway to review the tariffs, to review our pricing structures to ensure competitiveness. And I guess some of those results, and hence to my earlier question to say, can SITA be turned around? Yes, it can, but it would require time for you to even see improvement in some of these particular margins. The other one that I would want to talk to is the one, and I think the question by Honorable Stole links to the observation that was made by Honorable Felicia on the targets, and how we're taking comfort on the fact that we didn't achieve 37%, and how are we ensuring that would be, it will ensure that in the ensuing periods, there is increase in terms of performance achievement. I think, Honorable Member, we are ensuring that there is increased oversight as well as focus to ensure that we increase the achievement of our performance target, and that's what's giving the board as well as management a comfort in that particular regard. The AMD is going to talk to the cyber security as well as I'll invite the CFO to talk to the question on the irregular expenditure and the strategy that is there to ensure that is reduced. I think I'll just talk at a high level on that, Honorable Sithole. You would have seen that earlier when you would have heard when I spoke earlier that I said there was around 75% reduction in reported irregular expenditure, and it's particularly because a lot of those contracts are running out. So I think 75% is something that shows that there is a strategy that is being put in place to reduce irregular and fruitless expenditure, but I will give the CFO an opportunity to expand on that particular one. You also talked to the right of question that you raised as well. Honorable Bodlani, you spoke to how are we ensuring that we reposition SITA, make it relevant, and ensure that even to the extent that there are those stakeholders, some of our clients that have lost confidence, we regain their confidence to ensure long-term sustainability of SITA. Certainly, this particular board, as I've also highlighted previously, we have identified that there is a need to engage some of our key clients, prioritize resolving some of the challenges that they've raised, but not only that, in terms of coming up with solutions that would ensure that those challenges are alleviated also for the long term. So that is also underway. So there are different engagement. The AMD has had various engagements. The board is engaging as well as various executives are engaging those stakeholders as part of repositioning. But it will not end there. One of the key things that will be necessary with where SITA is right now will be for us to also from a positioning perspective, from an active marketing perspective. Previously, I did say that there are solutions that SITA has that right now we are planning to market those so that they can be uptake, again, to position. And yes, to a certain extent, some of those solutions might have to be reworked here and there to make sure they're relevant. But those plans are there to ensure the relevance of SITA into the long term. I think the question by the Honorable Chair, I will leave that for the AMD. He will talk to that. AMD, if you can come in. Thank you.
Thank you, Chair. Okay, just some of the questions linked to our APP targets and the dependency on external factors. I think the question was, why do we continue to do that? And if we don't do that, what is the impact on digital transformation? So as SITA, we've been striving to make our scorecard outward focused. In other words, being able to have targets that have a direct impact on citizen service delivery. In doing that, we need to partner with government departments to be able to then deliver on specifically applications that citizens then access or is used to provide citizen service delivery, modernize applications, implement new applications. And what we find often is that we are tied to the dependencies of the client, whether they have budgets. Sometimes they do, sometimes their plans change on their side, and the plans that we have in our APPs then get impacted. And then it becomes a challenge because then you would want to review targets mid-year, which is not always possible given the processes that we're following. So it's a catch-22. If we try to run away from that, it certainly is going to affect digital transformation. So I think there was a comment made in one of the previous meetings that there needs to be an integrated view around targets on digital transformation so that all entities involved, including departments on digitization, all have an integrated approach on targets so that we all held accountable in the value chain. And I think this is one of the areas that is a challenge. And if I move over to Court Online, in terms of why we didn't achieve that, the system went live, but there were stability issues on phase one. And we had to first get the infrastructure matters stable before we could continue then expanding the solution and putting more load onto the application. So the decision made with the department was to not continue with the phase one, increasing the scope of the application and going live, because we needed to focus on stabilizing then the current solution that was there, that involved cross-functional kind of involvement, both from the department and from SITA. And those are the challenges that didn't allow us then to put more, let's say, functionality on the solution that would then impact whatever we currently had. So stabilization ended up being the focus. I think on staff morale, the board chair covered it. We've had an extensive walk the floors, executive engagement. We've visited every office in SITA, engaged physically, face to face with staff, to try and build morale, to try and build confidence, because the negative sentiments in the market and the service delivery improvements that we need to do, it's a collective from the ground up, and we were trying to make sure that we get the message across, but also give staff the confidence that we move together, aligned to improve service delivery to our clients. The board also has an engagement this week Friday with all the staff to be able to then also drive the same message across. If we move to what are the plans to deal with improving cybersecurity? Cybersecurity and the cyber landscape is changing all the time. You got to be on your toes. But just to give a view that from a SITA landscape, in terms of what coverage do we have as SITA and control over ICT in national and provincial government, we cover about 37% of that landscape, meaning that 37% is SITA's responsibility to protect and control. So we have then implemented a number of cybersecurity solutions, security operations centers, and we would be able to monitor, what is happening on that network and protect. We've also done maturity assessment on that, using external parties coming in, and our maturity levels are fairly on the higher side, 3.93 out of 5. So on that 37%, we definitely have a strong base, but we are improving and closing gaps as the threat landscape changes, updating solutions, making sure that patch management is done and all those type of things. But the challenge we have is on the other 63% of the landscape, which SITA is not involved in. These were government departments controlling their own infrastructure, their own applications, and they run it on their own. And in these areas, there are a lot of vulnerabilities. We've been assisting government departments with this by doing maturity assessments. So we've done maturity assessments on over 107 government departments this year or the past year. And we then have tabled weaknesses to them to understand how they can close that and give them possible solutions that SITA can assist in terms of doing these things. So we're actively working with each government department, working with the DPSA as well, with their standards and directives around how this should happen. We're also working very closely with SSA and all the other forums that are set up in government with regards to cybersecurity, and we all trying to align on common standards, common processes to be able to then improve cyber resilience, because at the moment we are fragmented and we need to start focusing end to end. But at the moment, stressing that SITA only secures the 37% of the current landscape. If I then move to the two areas, and this was the 90% service improvement plan implemented, just to cover what we do here, we do a customer satisfaction survey, and out of the customer satisfaction survey, we get weaknesses that we identify as SITA that we need to address. And then we put initiatives to try and make sure that we address those areas. Now, the areas that we identified and we have not concluded that we missed on is linked to supply chain management. So the backlogs, we've brought the backlogs down, but we have not totally addressed all backlogs. The automation of supply chain is something that has moved a few times. We now got it under control, and we are driving to conclude this by Q2 this year, with all hands on deck on that. So that's one of the things that we missed because we had 90%. But the other stuff linked to that was pricing. So pricing, the revised tariffs that are submitted, which reduces then price points to government. That is in the approval process and not concluded. So that's another area that we need to conclude on. But the areas that we have done is business enablement. In other words, we work with all clients, make sure our business agreements, our SLAs, our demand pipeline for the year is understood. So we do that early in the year. Then customer plans per cluster is almost understanding each client, what are their pain points, what is their landscape, how can SITA then assist them, and we kind of do an assessment on each cluster to try and understand that. So that has been done. Then improving request for proposal turnaround times. So we're focusing on that, giving committed dates to clients, working with clients on getting their user requirements so that we can improve on the turnaround times of proposals for solutions. And then we implemented the dashboard, allowing every CIO in government to access and real time.
I think we've lost the acting MD there. Okay.
Customer complaints and those issues. So we rolled out a customer complaint solution, and that is gone live so we can track and trace complaints as well. Thanks, Chair.
Thank you. Thank you very much, Acting MD. I'm starting to get seriously worried on time. Can we move over to Broadband Infraco? Members, you know the
Chair?
drill. Yes, Minister?
Apologies for the interruption. I thought it might be misconstrued as being non-responsive. I'd indicated that on the aspects that were directly, directly asked for me, that I would respond once the SITA team and leadership have concluded their responses.
Sorry, Minister. I thought because of time, I would give you to wrap up once we've done with the entities.
Oh, that's fine then.
All right. Colleagues, can we move then to Broadband Infraco? And I was saying that you know the drill where you think that you should have had a follow-up or issues were not attended to properly. Please just note those so we can take them forward should we need to. Honorable Sithole, I'm not sure, is that a legacy hand? Because I didn't see your hand going down. Or is that a new hand? In fact, I think we should start with you because I stopped you when you were asking a question of BBI. So I see Honorable Sithole, Honorable Shongwe, Honorable Malisha, Honorable Subrathi. In that order, please proceed, Honorable Sithole.
Thank you very much, Honorable Chairperson. And now on BBI, I have only one question, Honorable Chairperson. I'm worried, Honorable Chairperson, about the issue of 60,580,000, which was actually increased from 16 million to 21 million on irregular expenditure. So now if that one can be clarified, Honorable Chairperson, and if they can give us their consequence management on it, Honorable Chairperson. Thank you very much.
Thank you, Honorable Sithole. Honorable Shongwe.
Thank you, Chair. Chair, on BBI, firstly, I would like to welcome the project, the presentation, and also ngibonga kakhulu for them exceeding on most of their projects, going an extra mile. My question, Chair, is where they connect with EU SASA connection, what is being done to avoid wasteful duplication on all those installations? If they know what there is a lot of duplication when we go on oversight that we see, Chair. And then on the areas that is the underserved, can they provide data in writing, Chair, if they may, of those areas they've worked on? Because we tend to get mostly in the KwaZulu Natal areas, we mostly get to be told that there's no such services. So if I may get that in writing, maybe out of this platform, I'll provide my email so that I can get that data and then look where we can also maybe advise with shorter group. Then, Chair, as you can hear, Honorable Sithole ulimele emoyeni ngoba unecembe ekuthiwa i-MK elithethe iward lapha eMandeni. So umkhonto kakhulu ushona kakhulu ebantwini. So there's been questions that we are being asked by abantu, Chair. Bangibuze ukuthi how can they access ilokhunja BBI as small business enterprises abanesifiso sokusebenzisana nabo, and how do they get access yabo directly without being told to go online, and when they're online they don't get responses, go on their website they don't get responses? And do they do workshops, Chair, when they go to those underserviced areas to interest the youth that has no information about this BBIs, so that they can have interest on having their own companies in such areas? The communities, do they even go and do workshops, or do they avail themselves to Labo Bantu Labo? And if they do, where and when was the last one they did a workshop or went to people to advertise themselves? This is what they do, and they are interested in developing Abantu Baleo area, Leo, Chair. And lastly, on the indirect jobs that they say they've created, are they able to provide data on that? And I thank them for doing that. I do believe that has happened, but do they have maybe data that they can provide to us based on that indirect jobs, Chair? Thank you.
Thank you very much, Honorable Shongwe. Honorable Alicia.
Thank you very much, Chairperson. I think I've got just a few questions. I just want to understand, Chair, how the BBI know if their efforts get more people online, especially in poor or rural areas. If their efforts are actually working, like do they track the number of schools connected, or how many people are using internet because of their projects? I just wanted to understand that. How do they track, that their services get more people online? And maybe another one, Chair, I just want to understand how has BAF helped the BBI achieve its goals of making this internet access available and affordable, especially for people in underserved communities, like I was asking. I think then my question is, has BAF made it easier for schools or clinics in rural areas to get connected? If maybe they can explain that to us. And maybe another one goes to the board. I just want maybe to know how BBI's board check if their systems for running the organization are properly working. Like, what do they do regular reviews or look at the past, decisions that they've made to ensure that, they've got a better system running. And maybe the last one, Chair, is maybe to understand, because we have this problem when it comes to state entities. So I just want to understand how the BVI board members are making sure that they don't use their positions for personal gain, and make decisions that could compromise them eventually. So I want to understand if maybe the board members are required to declare their outside interest, or maybe the possible conflicts and stuff. I just want to understand that, Chairperson. That's all for me.
Thank you, Honorable Alicia. Your sound was not very good, but I think we managed to get the gist of what you were saying there. Just two couple of issues from my side. And please, compatriots, colleagues, we are pleading with you. Can we please make sure that for this financial year, we really get these reports on time, not discounting the challenges that you would have faced, obviously having to clean up over many years. But now that you are where you are, it would really be good so that we can engage them. I mean, there's not much purpose, I think, in going into some of these issues now. So my questions are also a little bit forward-looking, like the rest of the members. Just an update on this process of, I see you, Honorable Subrathi, I'll give you a chance now. The process of accessing Eskom and Transnet infrastructure. I think the chairperson said that was underway. If we could just get a sense of what's happening there. On the acquisition of ECS license, I saw an article yesterday that you have gone out on a tender process for a consultant to assist you with the transfer of a license. I would really want to know why that requires a consultant, why this issue has to go out on tender, because that's an issue between yourselves, whomever you're acquiring the license from, and ICASA. So if you could just give clarity on why you need to go on tender there. Then you spoke about the commercialization model as part of your successes. Now, I remember when we were on oversight, there were young ladies that we met who were implementing in Emaxesibeni, if I'm not mistaken. And they were talking about the absolute failure of commercialization of the rollout of broadband in those areas. So what commercialization model that do you have in place? Is it standard across ISPs, and is it working? And then just finally, you recorded a marked increase, a 58% increase in your cost of sales during that period under review. There was no resultant commensurate, if I can say, increase in revenue. What would have been the reason for that steep rise in cost of sales? Honorable Subrathi? Oh, sorry. And I also just wanted clarity on the operating loss. I don't think I understood the reasons for that. Over to you, Honorable Subrathi. We can see you now with your big beard.
Thank you, Chairperson. I must apologize. I switched devices because I realized that you'll be missing, my colleagues will be missing to see me, since we are going to be hybrid for a while, and I won't see a lot of the colleagues in the House. Chairperson, let me start off maybe where you left off regarding the issue surrounding revenue and cost of sales. I've noted that in 2024, there was a significant increase in sales volume. In fact, it increased by 101%, but revenue only went up by 11%. Now, what does this gap say about BBI's price strategies, its customer base, or potential inefficiencies in service delivery? And how could BBI address these issues to improve profitability? Chairperson, a question related to transformation, I think, is crucially important as well. We noted that the BBBE level has fluctuated between level 7 and level 4, with some years noting non-compliance. And how does this inconsistency affect BBI's ability maybe to form partnerships or to secure funding? And what underlying issues does it expose regarding balancing the transformation goals with operational efficiencies in SOEs? Maybe the third and last question, Chairperson, from me would be, since the last round of shareholder funding, BBI has been focusing on generating cash through its operations. Given the ups and downs in sales, in fact, the sales shot up by 101% in 2024, but it took a hit with 63% decline in 2023. My question related to this is, what specific strategies has BBI put in place to ensure long-term financial stability without needing more investment from shareholders, and how do these strategies fit into its mission as a state-owned entity? Thank you so much, Chairperson.
Thank you. Thank you very much, Honorable Subrathi. Chairperson Kabini, can I hand over to you?
Thank you, Chairperson, and thank you, honorable members, for the questions. There was a question from Honorable Gilishe about the conflict of interest and ensuring that the board members' personal or business interests don't influence decisions. So there's quite a number of actions that we embarked on as the board in ensuring that we avoid conflict of interest or serving the interest of other businesses that we are involved in or at personal interests. The first one is declaration of interest by board members on an annual basis, and board members declare their conflict of interest, and their submissions are approved by the chairperson in consultation with the company secretary, and the chairperson's conflict of interest is declared and approved by the minister as the shareholder. There's also a conflict of interest policy within BBI that guides us in terms of how to avoid conflict and where conflict arises, how to disclose and manage it. There's also recusal from decisions during meetings where board members feel that they might be conflicted. So there's quite a number of actions that take place to avoid conflict of interest. There was a question on the Eskom and Transnet acquisition of infrastructure. So historically, what has transpired is that as the board, we engaged both entities, and the previous ministers were also involved. We also escalated the matter to the previous minister, who is now the DM, as well as the current minister, so that they can also engage their counterparts at political level, because at board level, it did not materialize and bear any positive outcomes. So what we have done recently is that in the last board meeting, we have decided that we need to form a task team that will also contribute towards the portfolio committee's process or intervention on acquiring infrastructure for BBI from non-ICT SOCs. So that's where we are now. But previously, engagements took place at political head levels from various ministries, which was Department of Public Enterprises versus DCDT. And in terms of other questions around the tender for the ECS license, commercialization model, there is an approved commercialization model that was developed in the previous financial year, and it was approved by DCDT. And some of the initiatives that form part of the commercialization model are already underway, initiatives that relates to SA Connect Phase 2, as well as the upcoming SA Connect Phase 3, which also has a supporting proposal, which was also submitted to National Treasury. So there is an approved commercialization model, and SA Connect is key and is the key project that underpins our commercialization model. It's a product in in the private sector language. It's a product that we're going to sell to the market, whether public sector or private sector. And then in terms of other questions, they are more operational and linked to connectivity. So I'm going to ask the CEO to respond to those, and then the CFO to respond to the questions around irregular expenditure, as well as capacitation of and acquisition of SMMEs into the system. Thank you.
Okay, thank you, Chair. I will proceed. So between myself and the CFO, I'll be requesting the CFO to come in and answer some of the specific questions related to finances. For example, the first one from Honorable Stolle about the fact that he is worried about the increase from 16.5 million to 21 million on irregular expenditure. If I may ask the CFO to respond to that one, then I'll proceed. Thank you, Chair.
Thank you, CE. Honorable members, just to go on to that specific question regarding the irregular expenditure. So on the irregular expenditure, you would have seen in the current or in the year that was under review, our irregular expenditure did increase by the 16.5 million, and that one is specifically coming through one of the tenders that was undertaken in the previous financial year, and in the process of evaluating of a tender, the tender would firstly go through the BEC process and then go through to the BAC process. And as part of the BEC process, this is where they will firstly check for the administrative processes to ensure that all of those are complied with, and then they would go and check for whether the service providers would be able to do the actual job. Now, in terms of the documentation of the BEC process, that documentation did not include it did not document the process that was followed with regards to the administrative phase of the evaluation, and that was only documented in the BAC report. And I think the key issue there with the auditors was that because it's not documented, they cannot be able to satisfy themselves that the process was actually undertaken. And I think subsequent to this, we have gone through a process through the Loss Control Committee where this submission was made in order for us to be able to get condonation, and we have effected the necessary consequence management and additional training to all the related staff members so that we don't have a similar issue recurring again in the next financial year. But I think what's very important is that subsequent to the checking through this process, we did confirm that there was no service provider that was prejudiced against as a result of this information not being properly documented on the BEC report. Thank you, CE.
Okay. Let me just turn my video. All right, thank you, CFO. I will call you on you again on other subsequent questions. So then proceeding to Honorable Shongwe's question on the duplication that might be arising in the projects that BBI implements for USASA versus the ones that we implement, whether via the DCDT or SA Connect projects. That has happened in the past, that we have noticed some duplications. We have subsequently engaged USASA because normally USASA would go on their own to plan according to their mandate in which areas connectivity must take place, and then they hand over that project and the plans to BBI, and BBI would then go and execute. And in the process, sometimes then we would discover that the duplications do take place. So we have now put together a task team that plans together with the USASA. We have got a database of the sites that have already been connected. So as we get the project schedule from USASA, we check against the database of what has already been completed, and then we go back to the drawing board. So for example, in Herigwala, we have discovered that out of the sites that are connected, the 26 of them would have been duplicated. And so we go back to USASA to reallocate new sites, and then we proceed like that. So we are now jointly planning together to prevent that. And then in terms of the data that you need, Honorable Shongwe, on the areas where we have worked on, where the rollout has taken place, as well as the number of indirect jobs, we shall provide that in writing. The information is available, including the GPS coordinates and so on. And then also on how can we be sure that the SMMEs in the various areas can access opportunities within BBI, and directly or indirectly, and whether the interest of the youth on the ground is taken into account, and whether we hold workshops and so on. Yes, certainly we do hold workshops. We have had quite a few workshops in different areas and so on. But we accept that probably would not have covered as many people as required. And also, when we roll out some of these projects, we go the standard route of advertising nationally, the tenders and ISPs to come on board and so on. And we do accept that some of them might not have access to that media. And in that case, we encourage them to write to us to the extent possible, so that they are in our database, as and when we go out, then they would get those opportunities. And that's how we have been doing it. In some cases, in the areas that you have gone, you would have had testimonials of the impact of the people that have been affected positively from the youth and so on. But by no means have we covered all the areas, so that gap still needs to be closed. And then the question from Honorable Pilishe on whether Broadband Infraco gets more people online in rural areas, and whether we are tracking the numbers of people online. Yes, the answer is yes. I'll answer that in conjunction with your next question of to what extent is this successful and so on. So the success is not always 100%, but the success is there. So we, on the Broadband Access Fund, for example, the purpose of the project was not to connect schools or clinics. So you would not get anybody confirming that they've had connections from a school, a clinic, and so on. The purpose of the BAF was to connect households directly, as well as public Wi-Fi hotspots. So it would be at the market square or at the taxi rank and so on, because the mandate for connecting schools and clinics falls as part of the social obligations that the mobile network operators and so on, those that got the dividend spectrum, are running with those part of the project. So from our side, BAF is directly connecting households and public Wi-Fi hotspots. And to that extent, definitely the information is available. The GPS coordinates are available, the households, the contact names. We do have all that database, which shows that for those people that have been connected, there is a huge impact. And the impact is not just in connectivity only, but also in the cost to connect. So whereas people would have been buying data for 90 rands a gig, in this case, they would now be accessing the same data for 5 rands or 7 rands. So the impact is definitely there. And in terms of the success, the success factor, like I said earlier on, it's variable. Where we got 52 SMMEs and ISPs on board who responded to the tenders and so on. Out of those, you would probably have 60% that have managed to connect successfully and sustainably. And obviously, if you have 60% out of those ISPs, the other 40% would report that it was a failure for various reasons, whether they could not get financing, or they could not get funding, or they did not have sufficient infrastructure in those particular areas. And then we would need to reallocate those opportunities to those that would have covered the ground in terms of the work given to them. So and then for SA Connect, the success rate would also be similar to that. Out of 76 ISPs and SMMEs that were appointed, you would get maybe 40 of them successfully implementing, and the other ones similarly not being up to date. Then the questions from the Honorable Chair on the ECS license, why we're looking for a consultant. It's a very small tender, but the main reason is that we don't have capacity in-house. And the purpose of this one is to get the documentation and the business case required by ICASA for the effective transfer of the license. The actual buying and selling between two willing partners is a simple process, but the documentation and motivation required by ICASA is onerous in order for them to be able to accept that particular transfer. So we just needed somebody to assist us with that. I think the chair covered the commercialization model. There's also the question that you asked about Emma Tabiseni, where some young ladies were saying it was a failure in those areas. I think that is covered by the statistics that I gave, in the sense that some would be successful, some maybe not so successful for various reasons. And it might be lack of funding, it might be lack of infrastructure, and so on. And these are the areas that we have to drill down into for the next phase of SA Connect. Earlier on in my presentation, I said these phases of SA Connect that we've been implementing will probably cover about 30% of the households. We still have the 70% gap before we can get to 100% coverage. And so those deep rural areas where you don't have infrastructure, you don't have anything at all, and it would not be sustainable for the ISPs. Sometimes they need different technologies. It could be satellite, for example, if it's in mountainous areas. And so if you allocate a specific area which is not sustainable like that, needless to say, you might be setting up that ISP for failure. And so we need a total, a different strategy to be able to cover all those areas. Then you mentioned, Chair, the cost of sales at 58% with no resultant profit. I think the cost of sales went up largely because of Eskom. Remember, Eskom is competing against us. Even though the agreements that we have, including the founding documents of BBI, stipulate very explicitly that they should not be doing that. And they are doing that because they can get away with it. And this is what we are engaging on. And this is what even this portfolio committee has also previously tried to engage on. That if Eskom is a wholesaler to ourselves, and they are a wholesaler directly to our market as well, it undercuts the possibility for us to make any meaningful profits. So if they increase the price of fiber, and we still have the same amount of customers on that same fiber, it does not translate into more revenue. It does not translate into more profit. It just translates into more costs, and we are battling with that. There are various models that we think would be workable between ourselves and Eskom, and that's what we will be exploring going forward. And then on the operating loss reasons, that is also linked to the increase in cost of sales, but with no immediate resultant revenue coming from that. If the CFO wants to add, she will come through. I think then going to Honorable Subrathi's questions, he also spoke about the revenue and versus the cost of sales. I think that's been answered. The efficiency does not increase because you're still running the same lines with an increased cost, but same clients. And as you try to sell more, especially because the cost has gone up, you find that the same Eskom is undercutting you on where you could have sold more, maybe to the likes of the private sector and so on. So that's where we are getting cannibalized, and it becomes a little bit difficult. And then on the transformation, the BBBE level fluctuating between level 7 and level 4, the underlying reason there is a bit complicated, but we are trying to resolve it. So some of the equipment that we buy comes from overseas. For example, the transmission equipment, some of it manufactured in America, in Germany, or in China. And as we buy that equipment, the people that adjudicate on BBBE, they expect that there is a certain ratio that goes directly to the SMMEs and so on. And if you buy equipment for 100 million, it means 100 million has gone out. But on that 100 million, you have got zero SMME empowerment. This is why we have now introduced, and you would have seen that we have met some of the targets. We have introduced that there has to be a partnership between the equipment that we buy, the OEM, and local suppliers, local SMMEs, so that increasingly they get empowered to be able to install that equipment, they get empowered to train other people, and hopefully in future we are creating new industrialists that can even manufacture that type of equipment within the company. So that is part of that, and the enterprise portion of that is the one that has been dragging us in terms of the triple BEE, but it's mostly because the equipment that we buy is coming from outside the country. Then I think the last one on the BBI cells, I think we spoke about that when you're talking then about the strategy to ensure long-term sustainability without shareholder inputs. I think the chair touched on that one. If we get these three things that we spoke about, the ECS license, the spectrum, and then the aggregation of infrastructure, we will proceed to be successful without any inputs. We have been surviving up to now without any financial inputs from government whatsoever. So we believe we can only fly higher if we are enabled in that manner. I think those are all the questions, Chair. Thank you.
Thank you. Thank you very much, CEO. I need to pause and check with members. It's 12:30. I do know that we have a sitting at 1400. So can I get guidance from members whether they are available to extend to 13:30? Or if we need to have a hard stop at 1 o'clock so we can just figure out how to move forward. Can we proceed until 13:30? Just a show of hands will give me a sense.
Honorable Chair.
Yes, Honorable Stole.
I'm worried because the sitting is in Good Hope.
Mm.
In Acacia Park.
Okay.
So we have to move to see it will delay us.
Okay. I know that Honorable Alicia is also taking a flight now. So what we are going to do, Honorable Subrathi says, okay, let's take members your remaining questions for the two remaining entities. Those who are able to remain, even if you're traveling that day, Stole, maybe you could just listen to the responses. So we'll take all your questions, and then thereafter we'll have to defer the item on the structure because I doubt that time will allow us. So Honorable Alicia, can I take you first? Because I know that you are supposed to be boarding in 3 minutes, and then I will come back to the
thank you.
Thank you, ma'am. You may proceed.
Thank you very. Thank you very much, Chairperson. Let me just let me throw it the Postbank first. So the way I understand it, Chair, I don't know if I'm audible now because you mentioned that I was breaking the last time. I tried to find
it's much better. We can hear you, sister.
Okay. So the way I understand it is that Postbank income went up, but so did their expenses. So maybe they can tell us, maybe, Chair, the areas that are costing more than they should and how maybe they are fixing all of that. I don't know if maybe they have branches that are using too many resources or what, but I also want to know if their current way of making money will survive things like interest rates and competition from mobile banking apps. So another one, Chair, is that they say they want to help people who don't usually have access to banks. But how do they check if, like, maybe the people are, if they themselves are really making a difference, not just opening accounts? For example, Chair, are those new customers getting loans or using their savings plan? So how are they making sure that if their move to digital services is working, you know, or maybe there's reliability on their part? The last one, Chair, for them, for the Postbank, is that they have added more customers. I think it goes with my previous questions that they have added more customers, but I want to know if these are really using the services like I said, or they just sign up and are forgotten. Then I ask how are they making sure that their online and mobile services are easy to use or safe for the people in the rural areas? And maybe in terms of like languages, do they support local languages or offer help for those people with maybe basic phones? Maybe just two for SAPO Chair. I'm interested in knowing how they will fix their financial management issues that caused Auditor General South Africa to question its ability to survive. So I just wanted to know their survival plan. How are they making sure that they are going to survive? And maybe they can tell us, Chair, what they are doing to improve its poor service delivery, which is like less than 45%, you know, and there's like over 50% complaint resolution. So I just want to know if they have a plan to ensure that their poor service delivery is taken care of or attended to, and their complaint resolution is above the 67% that they're telling us about now. So we want to know what are they doing? Are they hiring more staff? Are they updating their system? Are they improving the training? I don't know what they're doing, but maybe they can clarify that. Thank you, Chair.
Thank you very much, Honorable Alicia. Honorable Sithole.
Thank you very much, Honorable Chairperson. Honorable Chairperson, on SAPO, Honorable Chairperson, I have there's a lot of challenges in SAPO. But I'm trying to check, Honorable Chairperson, the issue of employees, because they retrenched 4,342. And when we was visited, I think it was in Gauteng, or not Gauteng, where employees representatives says they are refusing to meet them. If they meet them, and out of these 4,342, how many have they returned to the job? And the other, Honorable Chairperson, the issue of 366 post office that were closed, are they all still closed, or there is some means to open some of the post or the post offices? And the other one, Honorable Chairperson, I'm worried about the disclaimer, because if they are facing that disclaimer, is there any rescue measures that they do have in place to actually improve in the issue of reporting? And on Postbank, Honorable Chairperson, I'm trying to check the Postbank and the post office, because they say they are not performing because of SAPO. Did they have any meeting with the SAPO or program that they are sitting together to iron out some differences, to iron out some challenges that the SAPO is facing, because they are part of it? And the other, Honorable Chairperson, the issue of capacity in their banking system, if that one have been improved, or they are still in that situation where when we go to post office, Postbank, we find that they are not actually functioning as it's supposed to be. And I'm worried about the declining of car banking licenses. If that one can be improved, if they can have a system to actually meet that challenges. And the lack of bank skills, because it shows that there's what ways they are doing to recruit the skills for the bank. And the last one, Honorable Chairperson, the issue of educational strategy to better the outcome of to get the skills that they are short of. And the last one, Honorable Chairperson, I'm sorry to say the last one. The last one, Honorable Chairperson, they have improved from disclaimer to qualified. But what is their projection now? Thank you very much, Honorable Chair.
Thank you. Thank you very much, Honorable Sithole. Honorable Shongwe.
Thank you, Chair. Chair, government is perceived by people based on the performances of our entities. So the fact that IPOSA is linked with the SAPO gives bad reputation, as if government is failing to deliver. So in this regard, I don't have much to say on SAPO, but to encourage especially the CEO, she's doing much to turn around that entity. The only question I got, Chair, from Abantu is that when they are watching us on TV and they see the BRPs, they only see Indian people there. So they ask me a lot of questions, who is BRPs and why are they only Indian? Why is there no diversity on that space? So I'd only like to ask that, Chair. Thank you very much.
Thank you very much, Honorable Shongwe. Honorable Subrati.
Thank you, Chairperson. Chairperson, let me start off with where Honorable Sitolo had started. And that is, I recall during our oversight visit to SAPO, there was a group of disgruntled ex-employees that wanted to have an audience with the portfolio committee, and they raised concerns that they were part of the retrenched groups, but there was concerns that SAPO was rehiring staff. And members can correct me if my recollection is incorrect. We gave them an audience that there was a system where people have been informed. And I think I'd just like to know is there such a case? Maybe what my entities means, but I'm quite certain it was SAPO. SAPO last year, almost a year ago, here before us, and there was a big hype about day zero. I'd like us to get a sense of where are we in terms of SAPO? Where are we as an entity? The disclaimer for the 2024 alludes to ongoing issues from 2020, including asset valuation and third-party funds. So my question, what systemic governance flaws keep these problems alive across administration? Why is the ERP regime not address them despite having control over the accounting practices? Another question for SAPO, Chairperson, would be that personal revenue, which is a critical part of turnarounds, dropped by 16.29%, falling short of the 10% growth. And SAPO's revenue at nil. Only one logistic client secured compared to a target of 12. What structural hurdles are in the way competing with private couriers such as TikTok and Individual? That would be for SAPO. For Postbank, I've got a future perspective. First is that strategy is closely linked, tied to the NDP, which aims to ensure that 90% have access to banking services by 2030. However, the reality is that in South Africa, the banking sector at the top has 5 banks dominate, controlling 90% of the assets. This creates challenges for breaking into the market. So how can Postbank navigate political pressures, competitive influence, and regulatory hurdles to emerge as a trustworthy, state-supportive alternative? And maybe what safeguards are being put in place to avoid a drift towards populism, which would jeopardize the long-term financial health? Chairperson, the Reserve Bank has extended the deadline of the variation notice to March 25 for the distribution. Given the delays we've seen, what specific measures will guarantee compliance? And how does Postbank plan to ward off potential penalties, even the risk of license revocation, especially with the capital adequacy ratio being negative? Chair, net interest revenue has fallen by 3% on year, and the cost to income ratio has soared to 166%. Since transactional revenue faces restriction due to the SARB variation notice, what innovative revenue sources like fintech collaborations or microlend are being explored, and how does the bank plan to keep services affordable for low-income individuals, whilst also ensuring it remains viable. And maybe the last question, Chairperson, would be the report speaks of a slow mentality and notice shortages, particularly in IT. With 6 of the 8 executives' roles filled, how will Postbank cultivate a cultural shift of being considered to improve employee engagement and address a high vacancy rate, such as reduce executive committee vacancies to 20%? Thank you. Thank you, Chairperson.
Thank you. Thank you very much, Honorable Subrathi. Please, for next meeting, let's figure out what's happening with your network. It also wasn't very, very good there. Honorable Bodlani, and then the last will be Honorable Souls. Welcome, Honorable Souls. Honorable Bodlani.
Sir, I'm guessing we are asking on both SAPO and the Postbank, correct?
That is correct, Madam.
Chair, can I just get this out of the way, please? I have a problem where I believe that we do not get responses to our written questions, which we submit through our parties to the department. Every time we get the written questions, I see them for the various departments. I also go and check if the other political parties have asked the department. So far, that is not happening. I'm not sure what is the issue there. If the department could just please follow up. I know last week I was contacted to correct a question that I had erroneously asked about post office relating to Postbank. But generally, it has been months since we have received responses from our written questions. Just to get that out of the way, please, Chairperson. Chair, perhaps a direct and pointed question to the Minister. He has said to this meeting even that he will be going to the private sector to get funding for SAPO. What is the latest? Do we have anybody that has committed to coming on board? I know the last report was that there was no real interest, but sitting where we are sitting, what is the latest? Has that changed? And how is the Minister balancing that with the business rescue operations? I think this meeting, Chairperson, should be used to give South Africans, and especially South African post office workers, some sort of direction in terms of where the organization is. So the question would be, it is clear that there is not going to be a cash injection for the South African post office. Where does that leave operations of SAPO now with no cash injection? And how are the business rescue practitioners going to implement the turnaround strategy? And without the cash injection, how do the business rescue practitioners plan the sustainability of SAPO post their exit? So for me, in one word, one sentence, what is their exit strategy? Could they really talk to us about that? And to say, once they have exited, how sustainable will SAPO be? They also report about the decline in postal services. So then that means we should then be asking, what is SAPO's main stream? Sitting where we are sitting, what is the main revenue stream? And I understand that there has been properties that have been sold. Could the business practitioners please tell us how many properties have been sold since they've taken over, and what that money was used for, the money that was made, and what tools do they use to identify which properties would be sold? Tied to that, could they also tell us how many post offices have now been closed since the last time they reported to the portfolio committee, and how many post offices remain operational? I'm sure that number has changed. What is the current workforce of SAPO? How many people remain in the employment of SAPO? The last count, the last amount that we had of the cost of the BRP to the fiscus was 176 million rands. Perhaps also to the Minister. This is not a sustainable situation. What interventions and what powers do you have, Minister, to get SAPO out of business rescue? With the greatest appreciation that it is a court order, but I think there should be some movement. Can the Minister provide some clarity, please, in terms of how far his powers go in terms of getting SAPO out of this. And on the Postbank, Chair, even from the presentation this morning, I could see that the Postbank team is in different venues. Have they secured a office space? And this is one of the written questions that I had submitted to Postbank, I beg your pardon. So I know that question has not come through, so I'm asking it here. And the question I had asked in the written question was to say, how far are they engaging Public Works in acquiring that office space? Because the last time the CEO spoke, I did not quite get a sense that there was that collaboration with the Department of Public Works. I appreciate the defense, and I say defense as for lack of a better word, of the explanation that the CE gives to say they've only achieved 12% of their APPs, and also noting what she says to say it was impractical goals that they inherited. And to support what you have said, Chairperson, it is an appreciation of the work that is being done, with understanding that there is also some sort of mop up and rebuilding of the structures. So I will stop at that just to note that it was just a 12% achievement. The issue of the migration remains a sore point for most South Africans. Does Postbank have a report on the number of customers they have lost? And I remember when I asked the question, I was also worried to say, how would you be able to measure that? And the understanding was that you would be able to get from the Department of Social Development where those grants are being paid. So I don't know what mechanisms you would use necessarily, but what is the current client, considering that I think it's the CFO who also spoke about reduced customer volumes. And throughout this process of the migration, have you seen any new clients noting the issue of reduced customer volumes? Has there been an uptake on your services? And the balance of the clients that you currently have, what are the implications thereof on your licensing, your banking license? Can you give South Africans the surety that no issues will affect your banking license, so that people can know that when they bring their money to the post office, their money would be safe? And also, how confident are you about the security of your systems? Are you happy? Would the Reserve Bank also be happy with the current situation of your banking systems? And when you hear that the SASSA payout looks like one of the biggest revenues for the Postbank in terms of the interest that they generate, what I have here is that the Postbank should be treating the social development as gold, because it looks like they really are surviving on the back of the Postbank, of the SASSA grants. So what is the relationship? Because it looked very tainted with the messy transition of the migrations that we saw. What has been done to rebuild those relationships with the department and to ensure that they stay with you? I don't know if they have much more choice, but to ensure that you keep them happy as your major client. What is the number of people that are employed by the Postbank, especially considering that you speak about an increase in staff cost for financial year 24? And I note the accompanying notes that the presenter made, but did you hire more people? Was that part of the reasons that there was an increase? It wasn't a large increase on your HR cost, but did you hire more people, and where do they work from? And has there been any bonuses that have been paid to the executive? And has there been an audit of the employees of the Postbank to ensure that you do not have any ghost employees, something that is haunting us as a country? Now I can see my handwriting. Yeah, I think that's as far as I will go for now, Chairperson. Thank you so much, Galebo.
Thank you very much, Honorable Bodlani. Honorable Salt.
Good morning, or rather good afternoon, Chairperson, and the Honorable Minister and all the officials. Honorable Chair, I only have 3 questions, and that is for SAPO. Number 1, does the BRP, the Business Rescue Practitioners, still hold to...
Honorable Bodlani, please, man, please. Sorry, Honorable Souls, please proceed.
Do I need interpretation there, Chair?
No, rather not.
Rather not. I'll trust your judgment on that one. I thought Honorable Bodlani would say she missed me. Is that what it meant? No? Am I trying my luck?
Something like that. Please proceed, Honorable Souls.
Yeah, so my first question, does the Business Rescue Practitioner still hold to the assertion that in terms of the Act, a business rescue plan, once adopted, cannot be amended? If so, does the Minister hold the same view? That's my second question. My third and last question is the business rescue plan that's on the Post Office's official website. Is that the final business rescue plan as adopted by the creditors and the shareholder? Thank you, Chairperson.
Thank you. Thank you very much, Honorable Souls. From me, I just want to find out what the status of the provisional liquidation order is on SAPO. Honorable Souls, please close your video as you walk away. Thank you. So the status of the provisional liquidation order and then the outcome of the TES application, I heard you saying that that matter has been resolved, I think positively, but what is the implication of that? Is that to maintain current staff, or is it to bring back staff that was retrenched? What is happening there? The annual report also speaks to completion of the creation, development, establishment of an e-commerce mall. Can you just take us through what exactly that is and where that mall is to be found? To the Minister, just an update on the sub 1 kg regulation, I think that is. I do understand it was meant to have expired, if I'm not mistaken, at the end of March or maybe end of April. Has the Minister extended it? If not, why not? And what has been the outcome of the discussion paper that he put out for public comment, which spoke to liberalization of postal services? And then finally, just to SAPO, how many branches are still USO branches that are still open? If we could just get a sense there. On the Postbank, I think it was Mr. Rupla who said, on the Postbank, it was the CEO maybe of the Postbank who said they are looking to attend to the equity loss to Postbank from SAPO. Now, I'm very keen to understand what do you mean they attend to it, how? Because my understanding is that you have already written off that which you could not recoup from SAPO. You spoke about 350 service channels. Are these all retail? Is there still no presence, or is there any presence of the Postbank at SAPO offices, or is it just retail, as I was saying? Honorable Bodlani says that Postbank should be treating SASSA like gold. I'm quite interested to find out what is the ratio of your client base, SASSA, in relation to other customers, and how are you looking at sustainability of the Postbank beyond the over-reliance on SASSA? And then, okay, you spoke about the shareholder compact, which would have been one of the reasons for material findings against you in the last audit. Has this now been completed? And then similarly, what is the status on the amendment of the master services agreement with SASSA? And then, okay, this was just an aside. I noted that you regarded moving from a material finding in this financial year from no material finding when you were under a disclaimer as being negative. I would have thought that it's positive because at least now they have something to find, that longer in disclaimer. But as I said, that was just an aside. So it is now 12:59. Each of the entities has got 10 minutes to respond. I do apologize. If there's anything you want to respond to in writing, please do so. The last 10 minutes, I then want to give to the minister and his team for their additions. Can we start first with the post office, Mr. Rukla?
Thank you, Chairperson. Yeah, there are quite a few questions that were put to us. Thank you for the questions and the observations. I'll kick off with some of them. Between myself and the execs, like I said, we'll respond. Just with regards to the questions on the branches, which I'm going to group together. The branches were closed as part of an optimization branch strategy. If you recall, we mentioned at previous report back sessions that when we stepped in, there were duplication of branches. A lot of branches had logistical issues. Some properties were flattened. There was vandalism. And of course, there was just a duplication in terms of cost and so forth. So in terms of criteria that we had come up with, criteria that balanced out our USO obligations, as well as what we needed to optimize the branch network in order for the financial distress to be lessened. We then came up with the branch optimization strategy. And to that, the position hasn't changed. We still have 657 branches that are active. As part of the branch closure processes where we need to go in and get our last of our equipment and minor assets, those are ongoing. Obviously, there's some challenges with some landlords still not giving us access and so on. Because bear in mind, not all of the post office branches were owned. We have a combination of leased and owned properties. Will the branches, can they be reopened? No. In terms of the optimization strategy, it will be counterintuitive and counterproductive to go incur further cost when the entity is not in a good financial position. So that's an overall response from a branch perspective. In terms of then the questions posed around the workforce and the retrenchments. In that regards, Mr. Damus will also assist me in this response. But effectively, I want to highlight again, as we've highlighted in previous sessions, that we have an employee committee that was established when the business rescue process had started. And employees are duly represented by the union representatives as well as the non-unionized staff members. Through that process, we've attained or achieved very constructive, yet difficult, discussions and outcomes. And part of that was dealing with, staff issues and retrenchments. Bear in mind that at the moment we have 5,892 employees. That's at 31 March 2025. I'll just repeat that. We currently have 5,892 employees. We retrenched over 4,000, as was correctly pointed out. And in the process, there were certain vacant positions, where they had to be filled, and certain of the exited staff had the opportunity to apply for those, and those were dealt with as part of due processes, that we have in the organization. And of course, with consultation again with the employee committee. So I just want to quickly then touch on, so with regards to the ex-employee, I know there was comments and concerns. So again, those employees have been effectively dealt with. If you recall, we paid the retrenchment packages in 3 tranches, even though the 3rd tranche was contingent upon us receiving the 2nd tranche of funding. The BRPs made difficult decisions to then, find money from operations in order to fully pay out all retrenchment costs. So those were dealt with effectively and are complete from our perspective. Just quickly on the disclaimer, the CFO, the CEO and the CFO will also add to this. If you recall, when we presented the annual report, as I mentioned, it was not business as usual. We stepped into a scenario of the period where first 4 months was in liquidation, provisional liquidation. We were then appointed. There was a period of formalities to be engaged with. In the last 3 months of that 12-month period, we were largely busy with the Section 189 process whilst trying to preserve assets and preserve the business. So as a result, we didn't put up, for example, the e-commerce mall. That's not an objective that's from the business rescue plan. That's obviously has come through from the past management and the KPIs that we put into the document. Having said that, it's not something that's unfathomable in terms of the digital strategy, and that's our turnaround strategy that was presented to this committee. We do cater for modernization and digitalization of the post office. Obviously, that's going to come with time and investment. The disclaimer from an Auditor General perspective, the number of findings has decreased. Again, it's talking to a period where it was disjointed with liquidation and BR and so on. I think going forward, the 2025 financial year, as BRPs, the one thing that we did and took very seriously when we stepped in was to strengthen the control environment. What we found was a very poor control, poor admin environment. And as BRPs, we had created various work streams, and we had continuously tried to improve and still continue to try and improve the governance and the internal control structures that are in place. There's still a lot of work to be done, but having said that, the decline in the number of findings is encouraging by the AG. And the disclaimer really is the opinion that's been given, or the non-opinion that's been given by the AG. So the CFO will elaborate a bit more on that. Then in terms of number of Indian BRPs, I just would like to highlight that there are only 2 business rescue practitioners that are appointed on the matter. That's myself, I am Indian. Then Mr. Damans, who is colored. We do have our own support teams of specialists and experts that work with us on the BRP team, and the joint teams are very well diversified between male and female and the other age groups. So I'm not sure where that comment is arising from, that there's only Indians. I'm not sure the context of that, but that's the best as I can respond, that we have a very well diversified team that's on the ground. I think I would like to hand over to Juanito to deal with some of the legal responses, and then with the remaining time, the CEO can come in as well. Thank you.
Thanks, Anus. Thank you, Chair. Just on my side, I know we've got 4 minutes left to respond to, but I would just like to respond to, I think it was Honorable Gilishe that asked the question about the poor service delivery. The reality is, as we all know, and we know now formally, that we do not have the required funding to fix SAPO, to make it compatible. And that's an issue that we're still dealing with and grappling with. And it will always be an issue because it affects service delivery at the end of the day. Then just with regard to a question that Honorable Stole asked, I think Anush discussed the issue of the disclaimer. We didn't have to do an audit. Usually in business rescue, there's a moratorium against doing audits. We did an audit because it was necessary, just not for good governance, but because of the TERS application. And I'll get to your question then, Chair, and I'll answer it at this point in time. Our TERS application was successful. We managed to get, I think it's in total 383 million over 6 months. So that takes care of 50% of our salary costs over a 6-month period for current employees and not ex-employees. So that was one of the main reasons why we went to the audit process, and we're still going through our 24-25 audit process currently. Then there was a question from Honorable Shongwe also with regard to the turnaround process. The turnaround process is a very fluid process, and I think Honorable Subrati also asked the question about this day zero. It's a phrase that we're trying to stay away from because every time we say day zero, somebody thinks it's tomorrow or it's next week. But the business rescue environment is so fluid because where we're sitting currently, we have now our TERS application that's been successful. That takes care of 50% of our salaries for the next 6 months. We've got our USO funding coming in. So automatically it makes a big difference in how SAPO looks going forward. And we are busy consulting. We had one session with the DG, and we will still have further sessions once we have something concrete to take to our minister and our department to sit down and work and talk about a possible exit strategy out of rescue and handing SAPO back to management, its shareholder, and hopefully a new board going forward. So that discussion started as early as yesterday. After we had found out that our TERS application has been successful, we started talking about what can we take to our department and to our minister as something concrete to take SAPO out of the position that it currently finds. SAPO will be able to pay its operational expenses, but we still have a problem with the issue around fixing. We've got some ideas around that we will want to share with the minister when we have that interaction with him and the deputy minister going forward. Then there was an issue about properties that were sold. We have not sold any property. We need a ministerial exemption to sell property. We do not have a ministerial exemption to sell property, nor do we have any ministerial consent to borrow money against any property. So all of the current property of SAPO are unencumbered properties. So no property has been sold by the BRPs during the business rescue process. And then Honorable Sauls talking about the issue around can an adopted business rescue plan be amended? I don't know if there's a request for an amendment from somebody with regard to SAPO and SAPO's business rescue plan. We haven't received one or seen one, but we remain. The issue and the statement that was made at the last meeting was that there is nothing in the Act that tells us how to amend an adopted business rescue plan. That was the statement that was made, and we stick by the statement. There is nothing in the Act that tells a business rescue practitioner how to amend an adopted business rescue plan. And I don't want to get into the issue of giving legal advice because I've had various debates with colleagues around this issue. There are various opinions around this issue, but I stand by the opinion. There is nothing in the Act, and that's the only statement we made, that tells us how an adopted business rescue plan can be amended. And I'll stop with that answer there. The other issue is the BIAG plan that is on the website. It is the adopted business rescue plan that was adopted on the 7th of December 2023. Then, Chair, to your question, the provisional liquidation order was discharged in November 2024. It was very important for us to get the provisional liquidation order discharged because if anything happened to SAPO going forward and that liquidation order was converted into a final order, it would have had catastrophic consequences for our process and for the business rescue practitioner. So that order was discharged successfully. I think that's it. Fatima, I don't know if from your side and Lenny's side you want to add anything, because I think some of the other questions were directed to the minister.
Sorry, Mr. Damon, we've actually run out of time. Otherwise, the other entity won't get an opportunity to respond. I'm going to ask Postbank and then the minister thereafter. I will ask, after the minister has spoken, I will ask the members to advise us on how to handle the issue of follow-ups given the time constraints. But let's go through the responses, and then this issue of needing to follow up. I do understand Honorable Sauls, but these are the challenges. So we'll have a discussion on what to do, and if you have a follow-up, we'll have it after that. Mr. Ngema?
Thanks, Chair. I'll ask CE to start given the short time, and I'll come in at the end if we still have time, Chair. CE.
Thank you, Kaya. Thank you, Chair. Chair, can you hear me?
Yes, we can hear you, Madam.
Thank you. Chair, I'm gonna focus on the ones that are not really touching on the strategy, because again, I know you've planned a strategy
Please keep your
session for
video
Postbank.
on, CEO.
Okay. I tried to switch it. Can you see me, Chair? I can't see myself.
Yes, we
Oh,
can.
there we go. There we go. So I'm going to focus on the ones that are not touching on the strategy, because I know we're going to have that session. So all the ones that talk about what's the plan, how do we retain customers, what's our value proposition, how do we make an impact in terms of financial inclusion. I'm going to leave all of those because I think during the strategy session, those will be dealt with. So I'm going to deal with the ones that are more operational. Office space, absolutely still looking for office space. We did go and tender an open tender. We presented to the board yesterday. There were some asks from the board, so we have to go back on that process just to hopefully we can finalize something. I think the advice from board was good in terms of maybe how do we move forward with it, but we stay hopeful. Yes, our systems are absolutely secure. We're very confident. I think the fact that there's reduction in fraud and the fact that we haven't disturbed any payments in grants is also proof of that. I think there was a question from two honorable members around the SASSA relationship and the fact that that should be absolutely to us. That is a core toward the bank. We do value our customers, our SASSA customers. I think not only because of the revenue contribution, but because of our mandate. I think that's absolutely the mandate of the Postbank to be taking care of that segment of customer. I think the MSA is still a challenge. I suppose I'll speak for Postbank. I think SASSA can answer on their side. There are challenges around the MSA. It does not have a review date, but it doesn't have an end date, but every 5 years it says we should review in terms of pricing and all of that. And we've done that. We never necessarily got to an agreement in terms of how to optimize it for both sides. But we do have regular meetings with SASSA almost every month. In fact, we have meetings, especially now with the acting CEO, in terms of how do we find each other, how do we make sure that the relationship works better. But it is still a lot of work that has to be done on that relationship. Just maybe on the ratio of SASSA customers to what we call core customers, which are the customers that really invest with us. So the SASSA customer has reduced drastically over the last 3 years. Postbank used to manage almost over 8 million customers of the SASSA customer. Currently, we are around 2.1. There has been a lot of challenges around that, but there's also been a reduction of some work that SASSA did in terms of validating customers. So there was around just over I think 3 million customers that came off from that exercise. But having said that, I think in our strategy, again, we'll talk about how we plan to retain and also how do we plan to grow that book. Remember the limitation, which I've always shared, that one of the limitations is in the MSA in terms of how the MSA says we should treat that customer, that we can't do any more work with them except just give them a card, and that card can only accept the SASSA grant and nothing else, which then limits what we can do with the customer. And again, as I always say, works against our mandate in terms of financial inclusion. But those are the conversations we will continue to have with SASSA to relook. How many employees? I think questions around employees. No, we don't pay bonuses. We haven't paid bonuses. In fact, I think beginning of the year last year, we had made provision for a budget on bonuses. But once we looked at the performance, we felt that it will not make any sense for Postbank to pay bonuses. So we did not. And also, I think it aligns with the culture, because there's a lot of culture work that we still will have to do. I think when we talk about the strategy, we'll expand on that. But absolutely, there's lots of work on the culture that we have to do. Sorry, guys. there's a lot of work on the culture that we have to do, and it goes around performance management, but also just bringing employees along. And we'll talk about how we're going to measure on those, because it goes around assessing where we're at now, what are the key things that you need to resolve, and tracking yourself in terms of how we measure those. And by the way, when you do the assessment, you go to the employees to ask what are the issues that they believe could improve the culture. So it shouldn't be a management that tells anyone what are the culture major issues to resolve, but absolutely we have a plan around that. Like I said, on the total structure, the approved structure was around 518. We're sitting at just about 280 of that structure. Hence, we say we're sitting at only about 40% of the approved structure. But again, we did recognize that it was a blessing in disguise, because we're doing the work now to review the structure to ensure that it's reflective of a banking structure and the skills and the roles, and it's not a wasteful structure as we believe that it was in the past. And I think I've shared this in the past, that structure even has provision of roles for products we don't even offer. So it is not necessarily the right structure, but we have worked with it as much as we can so far. I think there's again, I think Chair, perhaps on the equity in terms of how do we deal with the loss from SAPO. Postbank does need capital injection, Chair. I think when we talk about how do we manage that, the impact of that, the long and short of it, Postbank, in order for us, even for us to actually achieve the strategy that we have, we do need capital injection. And that's something that the board, we're talking to the board with in terms of options. And one of the options might mean that we do need to go externally to find that funding, but we are having that good discussion with the board. In fact, our new CFO has been tasked with coming back with a plan in the next quarterly board. Relationship with SAPO, we do still service, some customers are still using SAPO, especially those who deposit with us, whether to deposit or withdraw. So we're still using SAPO. We do have conversations in terms of how else and what else can be done within the SAPO branches that meets both parties in terms of making sure we meet both our strategic long-term views, bearing in mind both where businesses are at. Chair, I'm going to leave it there. There was another question around the employees again that talked about, do we have ghost employees? No, we do not have ghost employees. And luckily, that was audited by KPMG that actually I think in the KPMG report, there was one employee that was questioned in whether they have been taken out of the system. And it was just a systematic issue. The employee had resigned, but the system was still reflecting them, but they were not being paid as such. But that was the only finding out of the KPMG report. Thank you, Chair. I've really summarized, but I again, like I said, I think when we have the strategy session, we'll talk about the strategic questions. Thank you, Chair.
Thank you very much, CEO. Minister, can I hand over to you?
Thanks very much, Chair, and to all the colleagues for the questions that were directed to me. And in wrapping up, I'll just try and combine all of them. For freshness, I'll start with Honorable Saul's one regarding the question on the amendment or potential amendment of a business rescue. The limitation with any movement there, Honorable Sauls, is that the Companies Act is clear that once a business rescue plan has been approved by creditors, there is no room to maneuver in terms of amending that. So my view would be in respect of the Companies Act, there is very limited. In fact, there is no room for any ministerial intervention there in terms of amending the business rescue plan. I think it's something that Anush tried to infer. Then there was the question, Chen, if I recall well, this was asked by Honorable Botlani, particularly around partnerships and where those efforts are in securing private partnerships. The developments with that is that currently the Development Bank of South Africa, which we obtained to do and offer us transactional advisory in terms of handling this question, is currently overlooking and assessing the unsolicited private offers that were previously submitted to the business rescue. And additionally to that is the framework for the public call out that will ultimately embark on in terms of going to market to suss out the interest, which we already know based on the number of those unsolicited bids that it exists. That process has unfolded a bit slowly, largely because of the internal processes that the Development Bank of South Africa have had to get into. But I'll also put in the DG if time still permits in terms of the mechanics of that. But that is the status that we have with regards to that. And then, Chair, you also asked about the provision for the reserve license, the reserve provision for the post office license. And fortunately, in the lead up to this discussion, I had engagement with the chair of ICASA yesterday, that while the gazette for the extension of that reserve for the 1 kg 1 kg courier service is still out currently for public comment, by convention, the provisions of the old license have continued to be in effect, so that there's no vulnerability to a lacuna in there. But it's something that would also going forward need to make sure that we close at all, so that the renewals do not overlap a time where it goes through the phase that it went now. And then going into SITA, because there were very two pointed questions, one regarding the regulations and secondly, regarding the process with the board. I'm glad to update the committee that with regards to the appointment of the new board, we are at the stage now where by the end of this week, we would have finalized the selection panel that will then go through the shortlisting of, all the applicants and ultimately make the recommendation for appointment. That process will obviously take two facets. It will come to the ministry for the final call and then be taken to the cabinet process. So once we've gotten over the timeline, the milestone of the selection panel, we can then present a timeline. That timeline, I just want to underscore, is also dependent on the scheduling and the frequency of the cabinet committee and the cabinet meetings that will then do the final and the ultimate sign off for those appointments. And then to the question that I think also comes from for the second time, given that even in the last meeting we responded to this, Honorable Subrathi asked a question that the chair dealt with regarding the impact or potential impact of the regulations on SITA. And the reality in which the intervention of the regulations responds to is primarily to strengthen across the architecture of government in its effort for digital transformation. It is not an infinite intervention that would exist in perpetuity, but there is a recognition, and that recognition, I think, is well agreed to across the board, that there are current deficiencies which limit the capacity of individual government departments to be able to meet their needs, whether at a quicker turnaround time, whether at a lower cost, and that restriction of a lack of freedom in moving in that handicaps that ability. And linked to that is, for me, the most important element in this is that SITA has a responsibility to ensure that the quality of service it offers across the board is the strongest instrument for retention of its customers and its clientele and its business. And when that is done, there is no need, and there would be no need for any other additional interventions that will be required. And secondly is, I think Honorable Subrathi also made the point about his inability to be able to actually have sight of those regulations as yet. Of course, yes, you wouldn't have been able to have sight of those because they haven't been published as yet. Once we get to that stage, we'll be able to gladly share it with the committee, because I think it's the right thing to do. But lastly, to make the point around, to respond to the question, which speaks about, is it possible to turn around SITA? Of course, I've got the belief in the faith that it is possible to turn around SITA, and some of these interventions also get towards that. I've got a lot of confidence in the interim board and their leadership in dealing with the restoration and redirecting of the institution on the right path, and their impact in the very short time that they've been there showcases that with the right hands at any given time, the institution can reposition itself and live up to its mandate, and that's the most important thing. I do get the sense that there is some fear. There is some fear about a dismantling of an institution that may be considered to be ultra vires in terms of the provisions of the Act. That isn't the case, and I think we can dedicate as much time as we can to debating the mechanics of that. But the regulations are rooted within what is permissible within the Act. And the most important thing is the recognition that they are a temporary relief instrument that empowers government departments, which many members and even everybody associated with the department has been on the receiving end of advances being made by different entities, different government departments about an instrument that would offer a degree of flexibility in this process. And that's the angle with which we approach this relief. The volume of requests for exemptions in this regard, it's untenable to consider those on a one-on-one basis when the common threats are being very clear and being raised by all government departments. Chair, I thought it was important to deal openly with those three elements of the questions. If I missed any other question, and I think there was a question Honorable Botlani asked about the migration, which I think the chair touched to it, but perhaps they can make a supplementary contribution there regarding the status in terms of the volume of switches that have happened to this stage and the use of both the gold and the black cards currently. Thanks, Chair.
Minister, thank you. Thank you very much for those very, very comprehensive responses. As I indicated, if any members want to raise issues in writing, please do so. But can I also request that the Minister take a note to the issue that was raised by Honorable Botlani about the number of questions that are going unanswered from the Ministry, both the ones that come from the political parties, but I think also there's a number that we would have sent also from the committee that we have not yet a response to. Honorable members, I wanted to get guidance from yourselves. I think you'll remember a couple of months ago, we attempted to pilot allowing members to ask their questions, get responses from whoever needs to respond. And I think we were unanimous that that was taking too much time and it was not working for us. Then now an issue that we have been having repeatedly in the committee is obviously members who then seek to follow up when a question has been asked. Now, it is not anybody's intention that members are not afforded opportunities to be able to interrogate issues properly. And I do want to get guidance and suggestions from members how you would like us to approach this issue of follow-ups, and obviously keeping in mind the issues around time as well. Can I just very quickly give you some time to reflect? I do need to release the minister and everybody, but I want us to have a common approach to this matter. Honorable Souls, I'm going to give you the first bite because you must also help us with process. I know you got your moment to shine, which was very lovely to watch in the other portfolio committee. And it's part of the reason why I'm raising this issue, because members may feel that the manner in which we are running this is not giving them an opportunity to interrogate issues, but to conserve time, it does seem to be the best method. Honorable Souls, any other member, do you have any comments on this issue?
Thank you, Chair. Maybe let me first register that the attempt is never to shine, but to do one's job and interrogate and get information. And thank you for always indulging myself, especially when I'm required to do so. For now, I think I'll rest. I obviously do have follow-ups, but we're looking at time and so on. So I'll rest, I'll step back. But I think, Chair, perhaps we should also consider perhaps using the approach of having a dedicated time per member to engage with different officials in a form of engagement. Maybe we should look at that format. I think it has helped a lot. And once again, to re-emphasize, not for the purpose of shining.
I was pulling your leg. No, I have no problem with trying it again, Honorable Souls. We did once in the committee, but we can try it again. Honorable Shongwe?
Thank you, Chair. I think, Chair, uyihlabe khona esikhonkosini uma uzothi asinikezwe ithuba to engage with the officials, because at some stage, not that the system currently doesn't work, it works. And at the same time, I feel ukuthi my officials tend to use the system against us, not to give us answers. So I think a platform where we engage one-on-one helps more than ukuthi bas answer sometimes. And we end up, even due to time, when we write to them, trust me, Chair, they don't write back. They just keep quiet and let it pass. So I applaud that decision, if it will be a decision, sir. Ma'am, thank you.
Thank you. Honorable Botlani?
Chair, I think my feeling is that sometimes our questions fall through the cracks. And then there's an issue of time that you can't necessarily do follow-ups. And noting that there's parliamentary processes, for example, of asking written questions, but those questions are not answered. So if we could just strengthen that end, and we know as members of parliament that we've got those methods for us to get answers from the department. But equally, Chairperson, I think we should put a timer on ourselves so that we manage time better. And if things cannot be asked here, there's other mechanisms that we can use to get the same answers. So I think the first thing is just putting a timer on us as members and getting the answers immediately so nothing falls through the cracks.
Thank you, Honorable Botlani. Honorable Subrathi?
Chairperson, I feel that given the portfolio that we have, what we're finding consistently is we're running short of time. And I think if you're going to implement a one-on-one conversation, how do you manage the members not going beyond the allocated time? So for me, it's a conundrum. You know, in certain portfolio committees where there's fewer entities to report to, it might be possible. Given us where we're doing in like this session, we just had 4 entities, but time is tight and the House is sitting now. So my concern is obviously the managing of time, and then the unfair use of time to those members who don't get an opportunity to engage on one-on-one if that privilege is opened up, and how does one manage it? So maybe the way forward is, given the fact that our concern is largely, and also don't want it, to be honest, to be used as a platform for populism and for party politics. I must be very clear on that. But I think the way forward would be, we should have far more pointed questions, maybe limit the questions to 3 per member, So it disciplines us to be far more pointed. And then the chair holds those persons accountable to answer. So I'm proposing not a one-on-one, but I'm saying limited questions, pointed questions, and the chair ticks off or secretariat ticks off as those questions are answered, because that seems to be where the problem is stemming from. The root cause is too many questions, no accountability from the entities, and it's getting lost. Proposed solution is to avoid populism, limited focus questions, a strict checklist that those questions are answered. In that way, it will discipline us as well. I think it will hold the members, those who are appearing before us, accountable that all questions must be answered. Thank you, Chairperson.
Okay, all right. Thank you, honorable members. I think somewhere within there, we're going to have to strike that balance. I do appreciate your inputs. Let me once again extend our gratitude to the Minister for participating in this meeting. Our apologies to the Deputy Minister and the Director General that they didn't have an opportunity to make additions. I think because of the time issue, we really had to cut the number of inputs that we had. I want to release members now because I'm not sure if all members are aware that while we had thought that we are not debating our ICASA report, we have now received notification that the EFF has requested to make a declaration on the ICASA report. So I think that the political parties then will need to, those who want to make declarations, perhaps will need to just prepare if they would wish to make declarations during the sitting. But also maybe just to extend congratulations to ICASA. I was very upset last week when they said they can't do their work because of Parliament delays. So your report has now been completed by Parliament. And to thank you once again, honorable members, colleagues, to thank the chairs of entities, the executive, chief executives, and the executive management as a whole, for once again, indulging us and coming at short notice. I think from here on, we'll have a set program once all the issues we spoke about at the beginning have been ironed out. With no further ado, then let me declare the meeting adjourned, and we will meet in the house and enjoy your afternoon further. Thank you, members. Thank you, colleagues.
Thank you, Chair.
Thank you, Chair.